This whole thing is about how we make money in the stock market. And I've been buying stock in the stock market for about 6 years now. I started out really trading Forex, which is basically buying and selling money against different pairs. And through that, I learned how to do what you call technical trading and also fundamental trading. And so there's two types of analysis when you're buying stocks or even doing Forex, and this technical analysis and fundamental analysis. So technical analysis is being able to read the charts. And whenever you see the charts, you're going to see time frames, and I'm going to show you all. And so hopefully everyone was able to download Robinhood or Cash App. I prefer people to use Robinhood because Robinhood has the best charts in terms of those two. Now, the reason why we would do Cash App instead of Robinhood is that Cash App allows you to buy fractional shares. Robinhood allows you to buy fractional shares. However, Robinhood does not make that available for everyone. There was a waiting list. And so depending on how long you have Robinhood, or if you're lucky, you're able to get fractional shares on Robinhood. But on Cash App, you can get fractional shares no matter who you are. And what does fractional shares mean? Fractional shares means that instead of buying a stock that's priced at $1,000, you can buy part of that stock for $1. So that if that stock grows 100%, you're able to double your money. So we're going to go over all of that, and you're going to see the visuals of all of that and what that looks like. And so, you know, in my estimation, this is the easiest way for people to make money with very little effort. But what has happened is that people have been discouraged through many different factors in society that the stocks is not for them, that it's only for wealthy people, or it's only for people with masters in business administration. And what I'll tell you is that many people with MBAs call me for advice, because when they go to MBA school, they don't even learn how to buy and sell stocks. And the educational system has completely failed people. I'm not going to go into politics very much. I'm going to just go into the technical aspects and the step-by-step approach into what I do. If people want to talk other things later, we can talk amongst ourselves. But what I'm going to do is I'm just going to go through my step-by-step approach into buying stocks so that you can just really just copy what I do, because money is a science. And if it's a science, that means that it can be replicated as long as you do the exact same steps, right? So if electricity is a science, then if you follow the exact same steps that someone else followed, you'll get, you know, your lights to turn on, right? So if you follow my steps, you should be able to get the same results. And the results that I get is I get in my portfolio, I get over 100% return per year, which means that I double my money every year. So that will sound crazy to a lot of people, because a mutual fund, a well-performing mutual fund, where you give your money to somebody who handles your money, they charge you a fee, they charge you money to take your money out, like they penalize you to take your money out, and if they do 8% a year, you're happy. You're supposed to be happy. So most of you, they put your money into a 401k, it might perform 4%, you're supposed to be happy. You put your money into a savings account, and the savings account, if it's not an online savings account, most savings accounts are giving you 0.1% per year. And we're going to go over all of that. We're going to go over those numbers, what it looks like, and then it's up to you to make the choices. But what I'm going to do is I'm going to give you the tools to be able to make the right choices in stocks and how to analyze stocks. So everyone, before I get started, just make sure you can send a text and make sure that you can hear everything that I'm saying. Can you hear everything that I'm saying? Just in the chat. Anybody? Okay, perfect. All right. So when we talk about wealth building, there are 3 ways to build wealth generally. Number 1 is owning a business. Number 2 is owning real estate. And number 3 is owning stocks. Those are the 3 main ways that people become millionaires in most societies. So starting a business, that would be very labor intensive. Um, in terms of your investment, I think that that is the best way to go in terms of cash flow. Because if you have a successful business, you will get cash flow every month. And then what you do with that cash flow is you put it into assets, right? An asset is just something that continually makes you money. And a debt is something that is a debt, something that's a depreciating asset. So if you buy a car, or depreciating vehicle, let's put. So if you buy a car and you drive it out the lot and the price of the car goes down 50% right when you drive it out the lot, that is a depreciating asset. And there's only an appreciating asset if you're able to make money with that car, such as being a taxi driver or an Uber driver. So at least you're making some type of money from that vehicle. And you may make a profit in terms of your monthly payment for the car or your mechanical expenses for the car over the course of the year is less than the money that you get from your vehicle. So that vehicle would then be an asset. Most people, when they purchase depreciating things. Things that are depreciating in value, or they're purchasing things that would be liabilities. Okay, so if you are always spending your money on a liability, you will never make money. You're always losing money. And that is 99.9% of people. That 100% of the money that they use, they're spending on liabilities. They're paying their bills. They are, paying for vacations. They're paying for, going to all types of events that doesn't bring a return on investment. They're spending their money in a way that that money is not multiplying, that money is not growing. And so therefore, it is scientifically predictable that if 99% or 100% of the money that you spend, and you can just do an analysis, all of you can do an analysis. If you don't have your money right now in something where the money is growing, that means you're losing money, which means that you are accelerating towards poverty. That is a mathematical equation, right? So if you don't have your money in something that is growing, I don't care what it is. If you don't have it in something that is growing, you are not gaining wealth. You are actually running backwards. And so that means that every month you get paid, or every 2 weeks that you get paid, you're losing because you're spending the money on liabilities. Everyone understand that? What I'm trying to do in this is to show you how to spend your money where your money is growing in the other direction. Because if your money is always growing in the other direction, or a good portion of your money is growing in the other direction, then you have the greatest chance of being wealthy. But if your money, no matter how much it is, I don't care if you're making $10, if that $10 is all spent on liabilities, or something that is depreciating in value, like buying some shoes, or buying some clothes, or whatever it is that you want to buy that this society tells you you're supposed to have. If it's a liability and it's a depreciating asset, you are accelerating towards poverty. If it is something that is gaining in value, an asset, an appreciating asset, you are running towards wealth. Those are the basic principles. It doesn't change. That is a scientific reality. Okay, so this is why we're talking about the science of money. And if you understand this science, then you'll be able to turn on the lights. You'll understand electricity. You'll understand how science works, because everything is based on mathematics. Okay, that's number one. So the 3 vehicles of wealth: owning a business, real estate, stocks. Okay, now owning a business, that's going to be something that you're going to have to be working on every day. You can lose money, all that. You have to start making your name in the marketplace where people rely on your brand and your products. That takes a lot of time. But that is actually the best vehicle, and the greatest vehicle for wealth creation is having a successful business, because you have cash flow and you solve your cash flow problem. The only reason why you have a job, a 9 to 5, is because of cash flow. So there's cash flow, and then there's appreciating value, which is wealth building. What you do is you take the surplus of your cash flow and you put that money not into liabilities, but into appreciating assets. So that's what having a business does, and that is what having a job does. It is preferable to have a business over having a job, because having a job, you're limited in your growth. That is called a salary, or how much you get paid per hour. So they've limited you right when you walk in the door. Whereas having a business, you're not limited. You can grow to make $1 billion a year. So that is why having a business makes more mathematical sense. Now, the second thing is real estate that a lot of people get into. The problem with real estate is that there's a high price of entry. If you're buying an investment property, generally it's a 20% down. Any investment property that you're getting that would be reasonable in the United States would be about $100,000 value. So you're putting 20% down. This is generally speaking. I'm not talking about people doing house hacking and they putting 3% down or 0% down because they're a veteran. With all those are special cases. Even in those cases, they don't compare to stocks because you have to live where you're making your money. You'd have to be a landlord with your tenants. Basically, you have to live with your tenants. So you get like a duplex or a triplex or a quadplex. And we're not getting into all of that right now, but I'm just comparing real estate now to stocks. In real estate, if it's a $100,000 property, you put in $20,000 down. And that's not even including your closing costs. In stocks, with 20,000 down, I can show you how you can double that every year, okay? Without any phone calls about a toilet not flushing, without any phone calls about having to, you know, fix this or that in the house. And also with real estate, your house, depending on what's happening in the real estate market, depending on your price, your house can be on the market for a year. I know people who've been trying to sell their house for a year and haven't been able to sell it. So maybe you made some profit with your house, but it's unrealized profit. It's an illiquid asset. It's something that you cannot cash right away. Whereas with stocks, you can cash out right away, okay? So let's get into stocks. When we get into stocks, the best approach into you yourself buying stocks is you want to look around and see what is popular in terms of what people are buying. What is it that you use all the time? Many of you I know through Facebook, right? Because I put the notice only on Facebook. So most of these, I'd say 99% of people on this call, they're on this call because of Facebook. So that means that you all are on Facebook. How many of you have stock in Facebook? You're on Facebook, you're making posts on Facebook, you are sharing the food that you ate on Facebook, you're sharing pictures of your kids, you're arguing about Kamala Harris, or Joe Biden, and Donald Trump on Facebook, you're spending time on Facebook, you've made a time investment into Facebook, but are you getting a return on that? There's a way to get a return on Facebook. And what I'm saying is that if you're on Facebook and everyone you know is on Facebook, you might want to start looking at Facebook stock. You might want to make money from Facebook. So we're going to go and we're going to start looking at Facebook. Yes, Facebook owns Instagram also. So some of you all are on Instagram. And so if you're spending any amount of time on these things, then it might be something you might want to start looking at. But because of the background that many of us come from, we've come from a consumer background. Our parents were consumers. Our grandparents were consumers. Nobody sat us down and taught us how to be investors. And we look at people who are investors as if they are people from a different planet. They put on a suit and tie and we think that's not us, right? And I'm gonna tell you right now, anybody who's talking to you about investment, they got a suit and tie, you need to run away from them. Because they're doing traditional investments that's getting you 8%, and they're not teaching you how to make money on your own. They're asking you to give your money to them. And over the years, people have asked me to invest their money, and I've always said no. I do not invest other people's money. The reason why I don't invest other people's money is because if one day the stock market goes down, I'm going to start getting phone calls from people who are nervous. And the approach to investing is long-term. This is not a quick lick. This is not putting money in for a week and trying to double up your money. This is putting your money over time. Over time. And we're going to start looking at money over time. And you all are going to really start looking at these numbers, and some of you are going to get mad, some of y'all are going to cry, some of y'all are going to shake your head. I'm sure all of y'all are going to shake your head when we start looking at these numbers and what the money over time would look like. to put your money into, let's just say, Facebook stock. If you order from Amazon all of the time, why is it that you're quick to buy from Amazon but not quick to buy Amazon stock? Because that's not something that's been programmed inside of us. But there are other families that they're making money from Amazon stock to the point where in 1 month, they are getting a profit and paying off their children's tuition at private schools with just 1 month of Amazon stock profits. And this is how the wealthy get wealthier. This is what's happening. And all of this is talk right now. I'm just priming you because I'm going to show you. You know, you can talk, but I want to start showing you what I'm talking about. And then I'm going to show you how to read the stocks. So as I told you, there are 2 ways to deal with the analysis in the stock market. The first way is technical analysis. That's being able to read the charts. The second way is fundamental analysis. Fundamental analysis is basically news and gossip, business gossip. And this is the way that works. Any one of you who are into sports and you follow sports teams and you say, the Lakers are going to beat the Cavaliers, the Lakers are going to beat the Bulls, you've made a value judgment that one team is better than the other based on information that you have, knowing that this player plays better than that player, or this player is injured and they're going to be sick and they're not going to play. LeBron James isn't going to play today, so the Lakers probably aren't going to win. You are making an assessment based on news that you have and information that you have. That is fundamental analysis. And many of us, particularly the men in here, we've been doing this type of thing all of our lives, but if we applied 1/10 of this type of analysis to businesses, you'd be sitting on $1 million, right? So right now we're going to do fundamental analysis on business. And when you start getting into it, it's actually easier to do that than to make predictions based on sports or celebrity news, which most people, you know, anytime Beyonce puts out something, all the talk is about Beyonce. Beyonce, Beyonce, Beyonce. So people are putting in their mind information about Beyonce, but there's no return on investment with that time. Okay? So what we're talking about is putting our mind into things that give us a palpable, tangible return on investment. And most of the things that this society programs us from childhood to put our attention towards gives us no return on investment, tangibly. Unless you're going to become a sportscaster, unless you're going to become a celebrity blogger, knowing celebrity news and knowing sports news is useless unless you're betting on sports and you're making money that way. So now we're going to get into business and reading stocks. So I talked about Facebook and I've talked about Amazon. So let's get into Facebook and Amazon charts. And what I'm going to do is, okay, Munit, can you please enable me to share screen?
Go ahead.
Okay. What I'm going to do now is I am going to share screen. Okay, can everyone see the screen? Just text in there. Let me get these. Okay, yeah, here's the text messages. Hold on.
Yes, we can.
Just tell me if you can see the screen, Munit.
Yes, we can. Yes, we can.
Okay, perfect. This is Tesla, but let's go to Facebook. These are the price charts on Tesla right now. We're going to get into Tesla because Tesla is very important. Let's go to Facebook because I talked about Facebook. Facebook's symbol, stock ticker is FB. Okay? So the way the charts are like this, you all. The charts give you a 1-day time frame. You see it here, 1 day. They give you a 1-week time frame. They give you a 1-month time frame. They give you a 3-month time frame. They give you a 1-year time frame and a 5-year time frame. What does the time frame mean? The time frame is letting you know the performance of this stock over time. right? So we look at the 1-day chart, and it goes from left to right. So it goes from the beginning of the day to the end of the day. And for the stock market is from Monday through Friday. It opens at 9:30 a.m. and it closes at 4 p.m. Eastern time, New York time, okay? So this is telling you the price movement on Friday from the beginning of the day. This would be, as you see, 9 a.m. It really starts at 9:30, but they start behind the scenes trading at 9 o'clock. But this is it right here at 9 a.m. and then this is at the end of the day, okay? So it tells you, it shows you the price movement. And what is important is not the price of the stock. What is important is the percentage growth. So we see the percentage growth is how your money is going to grow. So you put $1,000 in, you would have lost 70.74% on that day. 0.74% on that day you would have lost on that day. In the week with Facebook, you would have made 1.48% with your money in Facebook. In a month, and this is retrospective, so in 30 days. So if you put your money in 30 days ago, so this is a month. So it goes from here to here, okay? You'd have made 10% on your money if you put your money in Facebook 1 month ago. So 30 days ago, you put $1,000 into Facebook, you'd have made $100. You all see that? 10% of 1,000 is 100. So in 1 month doing nothing, you just had $1,000 in Facebook, you'd have made $100 doing nothing, okay? 3 months in Facebook, you'd have made 14%. See it right here. That number is right here. 1 year, you'd have made 45% on your money. If you put your money into Facebook and you left it in there for a year, and this is the strategy that I use, we are long-term holders. We buy growth companies based on not 1 week, not 1 month, but 1 year or more of its growth. And if you would have put your money into Facebook 5 years ago, you'd have made 182% on your money. Now, how do we do the math on this to be able to calculate, multiples? And it's very easy. If you see 100%, that means that you doubled your money. So anytime you see plus 100%, you would just take the 1 and increase it 1 more, and it would be 2. So that means you made 2x. Okay? So if you see 200%, it'll be 3x. 3x is 3 times. So that means you have 3 times the money that you put in. If you see 300%, it's 4x. You see 1,000%, it's 11x. Everyone kind of understand that? If you see 900%, it's 10x. Okay? So we're going to start going over the stocks and what it looks like. And when you start seeing a chart, the first thing you do is you look to see the pattern of the chart. You see, charts never move straight up. They always do a wave pattern. You see how it goes down, then it goes up, then it goes down, then it goes up. It goes down, and it goes up. That is the way charts move. Down, then it goes up. Down, and it goes up. Down, and it goes up. Okay? When it goes down, that's when the price is decreasing. When it goes up, that's when the price is increasing. So you want to see a diagonal line moving in this direction. If you see it moving in the downwards direction from left to right, that means you're losing money. And what Robinhood does is they actually give you color signals. So if it's red, that means that you're losing money. If it's green, that means that you're making money. So you can actually look at it that way. But you want to look at the directional movement in terms of the directional movement. Okay, so that's Facebook, and that's how Facebook did in 5 years. Let's look at, and what I do before I pick a stock is, 1, I look to see, again, like I said, is it something that a lot of people are using? Is it something that's hot? Like Amazon. I know everyone I know orders from Amazon. So that means that Amazon's getting a lot of business. That means that their business that's on and popping. So that's something I might want to look at. I know a lot of people's on Facebook. So I know Facebook is on and popping. That's something I want to look at. So what I do to make sure, first, is it something that a lot of people are using? We know that during this pandemic, Zoom, which we're on right now, a lot of people started using Zoom. So we can expect that the price of Zoom in the last 4, 5, 6 months has gone up, and we can check that. And we're going to check that. And the way that I look at stocks is this, and here's my rule. Everyone should write this down. I first go to the 5-year price. I check a stock that is popular. Facebook, Zoom, Amazon, Tesla, anything. I don't care if it's Coca-Cola, whatever it is that you think that a lot of people, and then you can choose to buy a stock also based on your own morality. Like, I don't buy stock in the oil industry because I feel like they're ruining the planet. So no matter how good that stock looks, I don't buy it. So you make your own judgment. Some people don't care. They just want to make money. So I'll buy oil. I don't care, right? So, but there's 1,000 stocks to choose from. So you can choose whatever you like, whatever works for you. So what I do is, first, because I'm a long-term investor, and the reason why I'm a long-term investor is also because of taxes. The rule is this: in the United States, they have capital gains taxes. Then they have regular taxes for regular people, which is employment taxes. Those are for W-2 workers. And the way they treat W-2 workers is ugly. Your tax rate will be higher than people who have businesses, who have business write-offs, and people who are long-term investors. And they know that you all aren't long-term investors because they know that they don't teach you this in public school. So they know that the likelihood for you to be long-term investors is nil, and that you only learn it if you got people who's in your family, or you went to special school for that, or you took it upon yourself to learn. But in the age of the internet, in the information age, we should be able to learn anything online, and that's why y'all are on Zoom on this meeting, because you want to learn. And the capital gains tax rate generally is 15%. And then generally, the capital gains tax rate for long-term investment is 15%. Long-term investments. That long-term investment means that you've held that stock for over a year or more. However, if you hold it for under a year, you're taxed at the regular rate that can go from 30 to 40%. Okay? So what that means is this. Generally speaking, if you're making $1 million, and it's a little different, at $1 million they charge you at like 20%. But there's ways you can get around that to 15%. But let's just look at the math, if you don't know this. If you made $1 million profit in the stock market, which is not unforeseeable, because I'm going to show you people who have, average people, and how they did it. If you made $1 million in a year in the stock market, and you cash out, in other words, you sell that stock and take the cash and do whatever you want to do with it, hopefully put it in another appreciating asset like a business or something. Hopefully you don't use your money you make from the stock market to pay bills, because you're taking profit and putting that money into a debt or liability. That means that money's not growing. So we want to take money that's growing and have that grow even more, right? So what I did when I sold my stocks is I formed a construction company in Africa, because I know that construction company is going to make me a lot more money in the long term. So I was able to sell my stocks and not pay my bills, but to have it in another growth vehicle. You see how that works? Because I'm running always towards money growth. That means I'll never be poor. But if I'm running towards liabilities, you're always losing money. You get that? Remember what I said at the beginning of this. So you're looking at the 5-year, and if you hold, again, the rule is if you hold for 365 days longer, you get taxed at 15 to 20%. So ostensibly, if you have $1 million that you made in the stock market, you get charged from 15 to 20%. Let's just go with 15%. Usually it's 20% at that level, but there's ways to get it to 15. So if you cash out in this 15%, you have to pay the government $150,000, but you cashed out on 365 days of buying that stock. But if you cash out on day 364, a day before, you owe the government 40%. So that's $400,000 that you owe the government because you didn't know that you could have held it one more day and it would have been $150,000. So that's a $250,000 loss because you didn't know the rule for one day. That's real. Now, it's usually 20%, but there's a way to get it down to 15. And that's a more advanced type of thing. And anyone would say, well, if I made $1 million in a year from stocks, I mean, if I get $600,000 from it, or if I get $850,000, I'm happy. I'm just getting the 600,000. Trust me, when y'all start making money like that, y'all ain't gonna just want to give it away to the government. The government is a business partner that you don't want to have. They're like the mafia. They're making you pay them, and they're a partner you never agreed to have. But that's just the rules. So we want to hold for more than a year. Okay? And let's now look at the rules. Here are my rules. It has to be a company that I think is popular and that is going to actually keep growing past a year, right? That is why I asked you all to watch Black Mirror. Some of you all, this is the first time y'all saw Black Mirror. When you saw that episode Nosedive, you're seeing what certain aspects of the future looks like in terms of technology. You saw there that everything was based on social media. Well, there's some truth to that, because the way that most of us are on this right now is because of social media. If it wasn't for social media, we wouldn't have all these people on here right now. So it's the power of social media. That was taken to a different level, but you get the point by watching Nosedive. Number two, what you saw in Nosedive was everyone was driving electric cars. So it's very clear that we're going to see the electric cars of the future. It gives you to start looking at the future. And all buying a stock means is that you are saying that this particular company and this particular industry is going to grow in the future, not die. That's all. You're making a prediction based on the future. And to make a prediction based on the future, you need to know what the trends are. That's why I wanted you to look at Black Mirror, so that you can start to calibrate your mind towards the future. That's all investing in the stocks is. Calibrating your mind towards the future. And if you don't know anything about what's going on now, you're not going to know how to make decisions about the future. That's why I wanted you all to watch Black Mirror, so that your mind is towards the future. Talk to your kids. Find out what they're into. Find out what their peers are into. They're going to tell you, oh, we don't use Facebook, we're into Snapchat. So now you want to start looking at Snapchat stock, because kids are what make new things grow. The young people. The old people, some old people don't even know how to do email. You don't go to older people to get stock information, unless it's somebody who's already been doing this and they know how to look into the future. But the average older person is outdated. Many of our, parents don't even know, how to do email. So you can't go to them to talk about what the future is going to look like. You talk to the kids and they'll tell you what's hot and what the future is looking like. They're going to tell you about TikTok. They're going to tell you about Snapchat. They're going to tell you about all these different things, So that's what you want to look at. So that's number one. You're making a guess about the future. Number two, what are people using now? Number three, we'll look at the price charts. The 5-year chart, write this down. Here's my rule number one. Or rule number three, let's say. But in terms of the stocks chart analysis, this is my rule. It is very easy. The 5-year chart has to have positive growth. You see how they do your credit score? Your credit score is based on your past. And that is how the bank decides whether they're going to give you money, based on your past performance. Well, right now, I'm teaching you how to give credit scores on these companies. If they don't show a good score in their 5-year chart, they do not deserve your money. So it better be green on this Robinhood chart, on the 5-year chart. And we're going to look to see how much it grew, because we've got a limited amount of money, so we're going to put it in something that's been growing good for 5 years. Facebook, 5 years, 182% growth. You all see that right here. 5 years. 1 year, it has to be positive too. It has to be green. There has to be an upwards movement. Facebook, 45%. Okay. And then the 3-month chart should be positive too. The 3-month chart lets you know how they're doing in the last 3 months. 14%. That's good. So Facebook has passed my test as a stock that will qualify for my monetary attention. But you can look at the 1 month too, and the 1 week, and the 1 day. The 1 week, 1 day, that's noise. That's what I just call white noise. That's noise in the background. Things go up and down over time. As you see, it goes up and down in a time frame, but then it goes back up. We're long-term investors, not just for tax reasons, because that's when you see the most growth. And then that's when you're not actually playing Russian roulette or gambling. You're actually making an educated decision, because this has been showing stable growth over a year or more. If it's been showing stable growth over 5 years, that's a good credit score. That's a good credit history. 1 year, good credit score. 3 months, great credit score. That means in the last 3 months, they've been doing good. 1 month is not so much of my concern. You can have a bad month. But it's the 3-month, 1 year, 5 year chart. Okay, so you all remember that Heru, when I am buying, I'm holding for a year or more because I'm a long-term investor. This is not a get-rich-quick scheme. It's a get-rich-slow scheme. So 45% Facebook. Let's move to another stock. Munit, tell me a stock that you're interested in.
You mentioned Zoom. Let's go to Zoom.
All right, let's go to Zoom. Let's look at Zoom. Zoom, which we're all on right now. Let's look at the 5-year history of Zoom. Zoom does not have a 5-year history because they went public recently. So that's why the chart looks blank, you see? And it gives you the dates. 5 years, it's just blank. It says listed April 18th, 2019, so it was listed a year ago. Over a year ago. When you start looking at Zoom, since it's been listed, the price of Zoom has been up 705%. That means you would have 8x'd your money if you put money in Zoom right when it started. If you put $10,000 in Zoom a year ago, remember, this is the 5-year chart, but they haven't been in business 5 years, so let's move to 1 year. So 1 year, it's been exactly 1 year from today, it's been 210%. But since April, when they went public, so let me just stop you there. Companies start out private, and then they go public. They start doing well, then they make a public offerings. And the public offerings is available to the public. As a private company, you can only raise money with people who they call qualified investors. And those investors are people who make $250,000 a year or have $1 million in net worth. And so that company, the private companies will come to you and then you invest in those companies. And that's the story with Bill Gates. Bill Gates made over $1 billion off of Google stock, and his investment was $250,000. And we can go through those numbers if you all are interested. I made a post about that some time ago, but Google, he invested $250,000 in Google when they were a private company. When they just started out, they were just 2 students at Stanford University. And they said, we've got a new way to do search. Bill Gates looked at it, he gave them $250,000 and he got a couple million shares in Google. And that couple million shares in Google has now turned into over $1 billion. This is how the rich get richer. So therefore, when you get reports and people are saying, Jeff Bezos's wealth just went up $1 billion today, and you're like, oh, these people are thieves, they're robbing, that means you don't understand how people make money. It's because Jeff Bezos, as the founder of Amazon, has over 1 million shares in Amazon. And if he has 1 million shares in Amazon and the Amazon price goes up by $100, he's just made $100 million. His wealth has increased by $100 million. So he has 1 million shares and the price went up $1 million. So his wealth just went up $100 million. And they'll report that, and everyone will say, the rich get richer and they're stealing, they're robbing from people. It's because you don't understand the stock market. But if you had 1 million shares in Amazon, you'd be happy it went up $100. It's because you don't know how to participate in the wealth that you'll hear this news and you get upset. But I'm saying don't get mad, get in. Don't get mad, get involved. That's what I'm saying. The reason why you get mad is because no one showed you how to get involved. So now let's look at Zoom. Since April 19th, 2019, Zoom has grown 700%, 705%, that's 8 times in over a year. In 1 year, Zoom has grown 210%. That means you'd have 3x'd your money in 1 year. A year ago today, if you put $10,000 in Zoom, you'd have $30,000. 3 months, Zoom has gone 65%. That means if you put $10,000 in Zoom 3 months ago, you'd have $6,500 profit. You'd have $16,500 profit. Now, there are people who understand that, oh, damn, we're having a pandemic. People are going to have to start working from home. They're going to have to start doing teleconferencing. Let me put my money in something like Zoom. Let me put my money in something like Skype. Let me put my something in Google, because people are going to start using it. And then whatever becomes the #1 platform makes the most money. It has the highest growth. So people who understand business gossip, which is just like sports gossip and celebrity gossip, they knew that this pandemic is going to keep people at home. They know that when you have a stay-at-home order, people are going to have to work from home. And so logically, more people are going to start using platforms like Zoom. Therefore, you start seeing its price growth. So now let's look at Zoom's price growth, and we'll see that a great amount of its price growth happened in 3 months. In 1 month, 10%. So if you put your money in Zoom, 10% growth is what you'd have seen. And this is how you make money in your sleep. And you put in whatever you can afford. But you're not going to put it in a savings account, because that's what they told us to do. They told us, put your money in a 401k. You put your money in 401k, it might make 4% and you're happy, but whenever you want to take out your money, they penalize you for your own money. You put your money in a bank and they're giving you 0.1% a year. And we haven't even got to the big stocks yet. That's what's going to make you all upset. We just done 2 stock analyses right now. We did Facebook and we did Zoom. And we're going to start getting into some of the high growers. And I'm going to show you what's in my portfolio in terms of what I invest in. You're going to start looking at the growth, and you'll see why I'm happy all the time. So they told you, save your money, put it in a savings account. You're getting 0.1% a year, while the bank is taking your money and investing your money, making money off of your money, charging you fees if you don't have a certain amount of money in the bank account. So what it does is it incentivizes you to put more money in the bank so that you don't have a low amount, so that they don't charge you fees, $10 a month. And those are the people who are on here from the Virgin Islands, you know all about that, because those banks are terrible. If you don't have a certain amount, they're going to charge you. Bank of America does. Different banks do that. If you have a checking account, it has a certain amount. If it doesn't have $1,000, they start charging you $10 a month, because they want you to put a certain amount of money so that they can invest your money into these vehicles like Zoom, Facebook, whatever. They make the money and then they give you 0.1%. That's what they're doing. Or they make the money, then they loan the money to people, charge them an interest rate that is 10%, 8%, 5%, and then give you 0.1%. And then when you want to get a loan, the bank tells you can't even get a loan. And they're using your money to loan it to other people. Or they'll tell you, put your money in your 401k, retirement fund. The people managing your 401k get a fee. So they're making money off of your money. They give you a return, and when you get your money, when you want to get your money for whatever you want to use it for, they penalize you, sometimes up to 20% for taking your money out. And this is what's happening because they know that you're never going to learn how to make money on your own. But when you know how to make money on your own, this is why I don't trade other people's money. When you make money on your own, no one can make money off of you. And you can teach your children, and you break the cycle, just like that. So what you're going to learn today, you can teach your children can teach their children, you can teach your grandchildren, it goes on and on. So this is the most valuable education, more valuable than you giving your money to Haru to make it for you. Because I can make you money, but that's not valuable. The money that you're going to get is less valuable than learning how to do this yourself. Because when you learn how to do this yourself, the sky is the limit. So that's Zoom. So that's the growth with Zoom. So when we do an analysis of Zoom, 5 years, the chart looks good, even though they haven't been in for 5 years. 1 year chart, it looks good. 3-year chart, 3-month chart looks good. It passes my test. So that's a stock that I would consider. All right. Let's do Amazon since we spoke about Amazon. Amazon, AMZN. Let's look at Amazon stock. We start with the 5 years. We don't look at the stock price. It's the first thing that most people are going to do who aren't skilled in the stock market. They're going to look at the stock price and they're going to say, damn, it's $3,000. Now you can buy fractional shares. You can buy $1 through Cash App or through Robinhood. So it doesn't matter the price. You can buy $1 and you'll participate in the stock growth. So the price of it doesn't matter anymore. Okay? Whereas in the past, to get into Amazon, you had to pay $3,000 to buy 1 share. That doesn't matter anymore. So we go into the 5 year, and if you buy from Amazon all the time, or if you bought from Amazon in the last month, you might want to say, well, I'm giving money to Amazon. Amazon better start giving money to me. You see, you start looking at the world in a different way when you start investing in stocks. You're not just a consumer anymore. You want to be able to make money off of these companies that you can consistently giving your time and money to. 5 years of Amazon. 500%. If you put your money in Amazon, you'd have made 6x. If you just put it in there 5 years ago, you'd have made 6x. $10,000 in Amazon 5 years ago, you'd be sitting on $60,000. $100,000 into Amazon, you'd be sitting on $600,000. $1 million into Amazon, you'd be sitting on $6 million. And I see some people shaking their head right now. You never knew this. I'm looking at people right now, they're starting to shake their head. And Amazon ain't even what I'm invested in. Because Amazon passes my test, but it doesn't have the growth that I like to see. We're gonna get into growth. 1 year chart of Amazon, 79%. So if you put your money into Amazon, it'll grow by 80%, almost double a year ago. And you see the pattern, it's a nice, beautiful upwards pattern, right? You all see that. You wanna see that. A nice, beautiful upwards pattern. I smile when I see charts like this. That's 1 year. Then the 3-month test. How's Amazon been doing the last 3 months? 33%. If you put your money into Amazon, that's why I'm telling you that the price doesn't matter. That if you put your money into Amazon, it would have grown by 33%. And that's what's important. Now that you can buy fractional shares, you can buy $10 in Amazon. I have many people who've emailed me and sent me say, hey, thank you for the fractional shares tip. I put $20 into Tesla and I've already made, a good percentage of that money on top of that. All right? So Amazon will qualify based on my test. But what I'm doing is I'm looking at different companies and for their growth. Because if I have $1,000 to invest, I want to invest it in the highest growth stocks. All right. I can't see the chat right now, but let's start getting into stocks that are in my portfolio. Now that I've given you examples of some of the big stocks. Let's just go to, let's just say Coca-Cola, right? That's a company that these mutual funds will invest in for you. these mutual funds that they're telling you to celebrate them if they get 8% return a year. And you've seen that the stocks that I've shown you, none of them are doing 8% a year. Most of them are doing close to double, if not more, right? 100% growth. But they're telling you that 8% is great for a mutual fund, so give me your money and I'll invest it. And this is the trash that we're dealing with, because we're being penalized for not knowing better, because they didn't think that we were going to look into this ourselves. So they will invest your money in what they'll call a tried and true company like Coca-Cola. Let's look at Coca-Cola's growth over 5 years. 15%. These are old companies. These are not companies that are in the future. Technology is about the future. So if you're going to invest in companies, it better be technology, because technology is about the future. Coca-Cola is about the past. So look at Coca-Cola. 5 years, 15%. 1 year, they've lost money. They've gone down 12%. 3 months, 5%. So based on Coca-Cola, they do not qualify for Heru's money. They failed the test. Their 1 year chart shows that they lost money in this year. Big bad Coca-Cola can't make money in a year. So they're not getting my money. So mutual funds will put your money into this, but you don't know any better. Remember, if you got $1,000 to play with, you are not going to put it into Coca-Cola. In a year, you're going to lose 12%. Okay? So that's the difference. Now, let's start getting into the action, y'all. So in my stock portfolio, when I really started investing, I told you all to watch Black Mirror on Netflix. Almost everyone you know is on Netflix, right? Netflix has a good business model because every month Netflix is making money because they do subscriptions. If you have a business, subscriptions is the holy grail of business. Why? Because you know how much money you're gonna make every month. If you got 1 million people paying you $10 a month, you know you're making $10 million a month at least, because that's your subscription base. That's predictable money. That's the holy grail of business, predictable money. You see, if you own a mechanic shop, you don't know how good you're gonna do this month. If you own a store, you don't know how good you're gonna do this month. But if you got subscriptions, you know how good you're gonna do. So Netflix is a good business. Now, let's go to Netflix. Let me just move this real quick. Okay, it says buy Coca-Cola, KO. No, we're not buying Coca-Cola. Not now, not ever. Their price growth does not look attractive. All right, we're gonna go to Netflix, which is NFLX. This is one of the first companies I invested in around 2015. So let's go to the 5-year chart. If you invested in Netflix 5 years ago, you did a 300% growth, which is 4x. You did 4x your money. In 1 year, you did 64% growth. In 3 months, 12%. I sold my Netflix stocks to get into my construction company. And the reason why is because it was actually one of the lower performing stocks. So what I did was I took my money out of a lower performing stock and put it into a business that would be getting me more money, right? But if you look at the growth of Netflix in the charts of Netflix, we see that Netflix would pass my test. Okay? So that was one of the first stocks that I got involved in was Netflix. Okay? That was what I call a growth stock. Now, we're going to get into other stocks. And you all can just do this with all different type of stocks all day long. And then you can see, damn, if I put this much money in, because Many people on this call are saying, damn, I put money into this and I wasted money 5 years ago into this, and this is how much money I would have had if I'd have put it into these stocks that I'm showing you. And that's why a lot of people are really, really feeling the pain when I start talking about these stocks. Nvidia, they make game cards for, they make graphic cards for computers. So that's technology, okay? And they also help in cryptocurrency mining. So let's look at Nvidia, 5 years. You all see that? 2,000%. If you put your money in Nvidia 5 years ago, you'd have 21x'd your money. If you put $10,000 into Nvidia, 5 years, and I'm not talking about consistently putting money in, I'm saying one time. If you put in $10,000 into Nvidia and left it alone 5 years ago, you would have 21x'd your money today. Okay, so I want you all to take out a calculator. 10,000 times 21. 210,000. You'd have made a $200,000 profit off of $10,000 if you put your money in Nvidia. Let's say you put your money into Nvidia a year ago. You'd have made 195% on your money. That's 200%, which is 3x. Okay? So you all start seeing what this starts looking like. Okay? And yes, I'm starting to read some of these comments here. And yeah, you start seeing people are telling you to invest in index funds and invest in mutual funds because of this and because of that, because what they're doing is you're supposed to give your money to a quote unquote professional. And this professional is supposed to make money for you when you could look at this and make money yourself. I'm teaching you how to do this yourself. In 1 year in Nvidia, 195%. Now, here's the thing. You don't necessarily want to invest in just one stock because you never know what happens with that stock. You don't want to necessarily invest in one industry, right? Like let's take the airline industry. If you have something like September 11th happen in the airline industry, their prices went down. Their stock prices went down because nobody was traveling. So if all of your stocks were in the airline industry, you'd have lost money for that time. But what people do is when they start losing money, long-term traders, they buy when the price is low. So even right now, we can look at some airline stocks before we move on. So let's just go through Nvidia real quick. If you put your money 3 months into Nvidia, you'd have made 40% on your money 3 months ago. 1 month ago, you'd have made 20% on your money. If you put your money into Nvidia 1 week ago, you'd have made 7% in 1 week. This is the percentage that these mutual funds are giving you for 1 year, and you're supposed to celebrate and have a party. Nvidia does in 1 week what these mutual funds are supposed to do in a year. I'm talking about the best performing mutual funds. So you start seeing how much of a joke this is. And the joke's been on us. And you're supposed to be a savvy investor to put your money in mutual funds. You feel like you're doing something. Oh, I got my money in mutual funds. But if you tell me you got your money in mutual funds, I'm shaking my head. And we're going to get into that. And we're going to start looking at some of the best performing. And one woman in particular that you're going to need to know who her name is. I'll tell you her name now. Her name is Cathie Wood. She's the most important person for you to know. Her name is Cathie Wood. She is outperforming Warren Buffett by factors. Okay? And we're going to get into that and these people that you need to know. Okay? And Cathie is spelled with a C. Okay? Now, Yeah, someone asked about growth stocks. I'm going to tell you what the growth stocks are. I'm going to tell you what they are, and then how you find it. How you find it will be, I'll tell you the channels, the YouTube channels that you need to watch, and how you keep up with certain people, okay, to get this information. You don't watch CNBC. You don't read the Wall Street Journal. They get their news too late. And they're biased because they are basically shilling for companies that advertise with them. That's why a lot of them have been against Tesla for years, because Tesla doesn't do advertisements. You'll never see a Tesla ad. They don't spend their money on advertisements. They spend their money on research and development. So none of their money goes into marketing, Tesla. So because of that, all of CNBC, the New York Times, the Wall Street Journal, those business journals were biased against Tesla because GM, Ford, the internal combustion engine people, and we're going to do a nice conversation about Tesla. It's coming up. This is going to be a deep, in-depth conversation, and you all are going to understand how to analyze stocks from a fundamental point of view, from a news point of view, from a technology, from a future point of view. Tesla is the best model to use. I can go on and on about Tesla. Now, those publications are biased. GM and Ford are paying CNBC through ads, and so CNBC, their pundits are all positive about internal combustion engine vehicles and negative about electric vehicles. They've been, and they've been saying the price is going to go down, the price is going down, and there's a way in the stock market that you can bet on the price going down. It's called put options or short selling. That's too advanced for this conversation right now. But what happens is that they've been losing their money for the last couple of years betting that Tesla is going down. Tesla just keeps going up, and there's a reason why it keeps going up, and we're going to get into that. That might be the highlight of this whole thing, is when we start talking about Tesla. So you have Nvidia. This is basically a computer chip processing company. We saw that in 5 years, you'd have made 21 times your money. Let's go to another computer processing. This is in my portfolio, AMD. And the way that you can find out what these companies do, let's just go to lower. When you go to Robinhood, they tell you about the company. Nvidia Corp, you see right here, engages in the design and manufacture of computer graphics, processors, chipsets, and related multimedia software. Okay, so it tells you what the company is. And a lot of your computers are going to have either Nvidia, AMD, or Intel chips. So as long as computers are being purchased, they're making money. Okay? All right. And notice I haven't gotten into reading their earnings reports and this and that, because all of that information is built into the movement of the price chart. Okay, so I'm not going to get into reading their annual reports and all that, which is good to do. You can do that. You can get their annual reports off of Robinhood. Will tell you the earnings that they did and the price. You see, here's the earnings. You can hear their earnings call, which is like every 3 months. The CEOs of the companies, they talk about how the company did. They will tell you if the earnings, the actual earnings, is better than the estimated earnings or the projected earnings. So what you'll see down here, that little green that's like in a shadow, is what the analysts projected, and this is what actually happened, the dark green. So they actually performed above their expectation in the third quarter of 2020. That's how you read that. So that means that they are performing above expectations. So you know that that is, and they've been doing it for the last quarters. You see, that's quarter 4, 2019. I'm just showing you how to read this. But all of it shows up in the charts. So really what you need to do is just look at these charts and be able to see what's the percentage growth in the 5-year, 1 year, 3 months, one month, and all of that, okay? Remember, the strategy is buy and hold for over a year. We are long-term investors here. Now, let's look at AMD. AMD for some reason, I'm not getting AMD. Hello? Okay, are you all? Okay, hold on. Let me, that is Nvidia. I'm trying to go to AMD. And for some reason, I'm not being taken to AMD. Let me see in the chat. I'm not sure what's happening. Yeah, we can talk about the ETFs and all of that. But for some reason, I am not, oh, hold on. That's because I was, okay, hold on. Okay, I don't see.
Can you delete it?
Yeah, hold on. Let me refresh this page. For some reason, it wasn't moving. Okay, here we are. AMD, y'all. All right, sorry for that. All right, let's look at AMD. What is AMD? They are advanced micro devices. Engages in the provision of semiconductor business, operates through follow segments, computing and graphics, blah, 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 okay? Let's look at the 5-year, are you all, I hope you all are sitting down. 5-year price growth for AMD, 4,500%. That means that if you put your money in AMD, you'd have 46 times your money. That's a 46x. If you put your money in AMD a year ago, that's 163% growth that you would have had. AMD is in my portfolio. 3 months, 53%. So it passes the 5-year, it passes the 1 year, and it passes the 3 month. But the growth has been so great, I want to participate in that growth. So if they're doing 4,000% over 5 years, that's an average of 1,000% a year that they've been doing. And so I'm going to be looking at that very carefully, and I'm going to hop in that. We see that the 1 year was 163%, and I'm expecting even more growth. And if you start looking at it, look at that, and you see where it gets steep right here. This is from July 10th. You see that the price has taken up in the last year, since July 10th. This is a nice growing chart. You see? So this is a growth pattern over the last, so when we go to 3 months, we see 53%, 1 month, 42%. That's a nice growth in 1 month that I'm gonna wanna participate in. So if you get into this stock, you saw what they did in the last month. Like I said, 1 week is noise, 1 day is noise. You start really getting a sense of the stock when you look at 3 month, 1 year, 5 year, it qualifies. And it's a technology, which means that they are focused on the future. Remember when you watched Black Mirror. Now, so AMD is in my portfolio. What else is in my portfolio? Square is in my, I told you all to download Cash App. Everyone I know is using Cash App. Cash App is owned by Square. They made it so easy for you to transfer money with no fees. They are putting Western Union, MoneyGram out of business. They made it easy for you to buy Bitcoin. They make it easy for you to buy fractional shares. Their business is just going up. They're making it so that you no longer need a bank. And everyone I know has Cash App. So in terms of me knowing it's popular, me knowing that it's a technology, then I know that this is going to be good for the future. Now, I go into Square stock, and then I do my price analysis. We go to 5 years. Square has done 1,283% in 5 years. That's 13x. And if you start looking at the chart looks really interesting. Now that you all are learning the chart, it moves from left to right. This is November 2015, and you see the price. It goes up. It's a nice curve. It goes down. It goes like that. And then something happens here, and it shoots up. The more steep this looks, faster the growth. So you can look at a stock and see if it's a fast growing stock or a hyperbolic growing stock just by the orientation of the graph. See that? So we know from March, it's really had its greatest growth because the incline is is close to like a straight angle. You all see that? See that incline? So we know something has happened in growth in terms of March 20th. So if you go to the 5-year in square, you go to the 1 year now in square, it's 135%. So in 1 year, you'd have done more than double, putting your money into square. 3 months, 88%. So in 3 months, you'd almost doubled your money. It's almost at 100%. In 1 month, Square has done 20%, 19.6. And in 1 week, you started seeing it go. You see? So I'm invested in Square. That's in my portfolio because this is hyperbolic growth. Okay? So I know that in a year, I'm looking like I'm going to double my money, but I've been in Square for more than a year. So I've already doubled my money. Okay? So that's Square. What else is in my portfolio? I can go on what used to be in my portfolio as well, and those are things that I've actually sold. And then we're going to talk about losing money. And I'm going to make a statement that's going to be very provocative. We don't lose money in the stock market. And that sounds crazy. But I'm about to tell you why we don't lose money in the stock market. And I'm going to give you an example with a stock that I was in that I was quote unquote losing in about 2 weeks ago. I'm going to give you that story, but let's look at Tesla. Tesla is in my, well, before we move to Tesla, because that's going to be a longer conversation. So we hear a lot about electric vehicles. Electric car maker in China is called NIO. They're competing with Tesla. China is a 1 billion person market. So you want to look, so you look at NIO stock. They make electric cars, and let me show you what their cars, you should always see what their product is. So let's look at NIO cars. These are electric vehicles, and let's go to the images. So these are what the NIO cars are looking like, y'all. And people are buying them. However, Tesla is still the model that people love. So, you know, this is a NIO. Let me make sure that you all can actually see this. Unique, can you tell me, can you see the car on the screen?
Yes, we can. Red,
Okay.
shiny.
Yep. So this is a NIO vehicle as well. I'll make it bigger. See it? Looks beautiful.
Yep.
And this is what they're doing in China right now. This is a NIO sports car. Looks beautiful. These are electric vehicles. Now, here's what you need to understand. And I'm going to, because now we're getting into electric vehicles, and this is where I'm gonna start talking to y'all. I am going to take it off screen. Okay, I'm going to go off screen. Let me stop share. Okay, you all can see me now. All right, this is what you all need to understand. In the 1900s, there was a convergence of technology. You started having the telephone. Well, let's just talk about transportation first before I move on, because then this is going to be important for Tesla and how you all can think about it. You all can see me?
Yes. Yes.
Okay. In the 1900s, the main modality of transportation for the average person was the horse and the buggy. Then the automobile was invented, and not only invented, it started being manufactured. During that time, you could actually read the newspapers at that time, and the people who own horse and buggy industry were putting out ads in articles about the new automobiles and saying that you could die driving these things. They weren't reliable like a horse and a buggy. That you could blow up driving these things because it's an internal combustion. Combustion means blow up, fire, combustible. So people were being scared. And some of the people who took these ads going against the automobile industry were veterinarians. Why would veterinarians take ads against the automobile industry? Because veterinarians were making a lot of money because everyone was buying horses as their main way of traveling. And if you have horses, the horses get sick and you have to take care of the horses. And so now veterinarians are making money in an ancillary way. Yes, a horse mechanic. They're making money in an ancillary way from the horse and buggy industry. So they were very resistant against automobiles. The horse and buggy industry was very resistant against automobiles. But here's the thing, you can't stop technological progress. The future is actually coming at us. If you watch Black Mirror, you'll understand that. The future is coming at us. We're not going towards the future is coming to us. And those of us who understand this will be able to be prepared for the future and be able to build lives where our families can thrive based on the future. And you could have been somebody who was Amish or into horse and buggies and saying, I don't like technology. There's some of our people who are like that. There's some people who refuse to have email and they want to do letters. But those people don't realize that 100 years ago, mailing letters was a technology. You see, the people who are uncomfortable with technology today from a moral and a principle point of view are comfortable with technology that existed 100 years ago. So they're not really against technology, they're against technological progress in their day and time. You see, because there are people who are saying, I'm not going to do email, that's the mark of the beast. The internet is the mark of the beast. Some people are laughing because they know people like that. They rather, you know, mail. But using the mail, you know, and having cars deliver mail is actually part of technological progress. Now back to the horse and buggy thing. If you were an investor in the 1900s and you saw the automobile being manufactured and you invested in the horse and buggy industry because automobiles were new, you don't know about the horse, you don't know about the automobiles, you don't know about this, and you invested in horse and buggies, you would have lost your money. Those who invested in the automobile are the ones who made their money. Period. This is what's going on with electric vehicles. If anybody here has ever driven a Tesla, they will know that they don't want to drive another car. Okay? No, you don't have to invest in 5G. You don't invest in anything you don't want to invest in. There's so many things to invest in. If you think that 5G is harmful, just like I don't invest in oil companies. I don't invest in oil companies. Right? And we don't need to get into a debate as to what people are going to invest in based on moral reasons. That's not the point of this conversation. It's just teaching you how to invest, and you are now enabled to invest in whatever you want to invest in based on your political or moral philosophy. I'm just teaching you the tools. I'm giving you the hammer, and you can build the house however you want. Okay? Like I said, I don't invest in oil companies. There are people here who invest in oil. I don't invest in fracking companies because I think it's dangerous to the environment and causes earthquakes. It shifts the tectonic plates. I'm not going to tell you what to do with your money. I'm just teaching you how you can actually thrive in stocks. Okay, so I hope we don't waste too much time here debating. We need to learn the techniques, and then you can go into your own little enclave and do what you want to do with the techniques. I take my money, I take my profit, and I invest in Africa. That's what I do. I'm not telling everyone you got to do what I do. I'm not here for you to be a moral clone of me. I'm just teaching you how you'll be able to make money instead of just making money from your labor. You'll never get wealthy making money from your labor. You can even ask professional athletes. If you only can make money from your labor, you end up losing. Okay? Now, yes, I invest in Africa because it's actually an upside. Because Africa is actually under construction. It's actually showing a growth curve similar to some of those growth stocks. And we can talk about that later. That's a whole different Zoom meeting. I just want to get into these stocks. Now, if you invested in the horse and buggy in the 1900s, you were losing money. You were investing in a dying industry. Internal combustion engine vehicles are a dying industry. The reason is because it is an industry where the cost to maintain your car is always adding up the older the car gets. So it's more of a liability the older it gets. That already tells you that it's a bad investment. If something costs you more to have it over time, in terms of a liability, it's not a good investment. So an electric vehicle doesn't have internal combustion engine parts. So you don't have to worry about an oil change. You don't have to worry about a carburetor. You don't have to worry about all these things that break down with an ICE vehicle. We call it ICE vehicle, internal combustion engine. Internal combustion engine vehicle is a horse and buggy. If you've driven a Tesla, you're never going to want to drive anything else. Okay? So here's the deal. It's actually better for transportation because it's cheaper on gasoline. If you're paying $3 a gallon and your car is getting you 20 miles a gallon, for that same $3 price, you're going to be able to get, for charging your Tesla, you're going to get maybe 400 miles. As with that same price, you'll get maybe 20 miles with a car, or 40 miles a gallon. So you're getting 10 times the amount, 10 to 20 times the amount of distance with the same money. So that's why you would want to get an electric vehicle. You're saving money on gasoline costs, particularly if you drive every day. That's number one. Number two, maintenance costs. There are no maintenance costs with an electric vehicle except for changing your tires and getting windshield wiper fluid. There's no oil change, there's none of that, there's no tune-up, there's no change. You know, it has a motor and it has batteries. And they have a warranty for like 10 years. Okay? Now, that's why electric vehicle companies, you're catching them at the beginning. You are right now learning how to invest when the telephone got invented. You're learning how to invest when the radio got invented. You're learning how to invest when the automobile got invented, when the airplane got invented. See, it's almost like every 100 years, there's a major shift in technology. And the shift in technology you're having now is in energy, transportation, and artificial intelligence, computer learning. Those are the main shifts that you're having. And so therefore, if you invest right now, you're investing early still. So people say, is it too late for Tesla? No, Tesla is only getting started. Why? Let's look at the Tesla chart. I'm going to share the screen again. And we're going to go to the Tesla chart. So back to Robinhood. So this is electric vehicle company NIO. And the electric vehicles look nice. They look beautiful, as you saw. That's what these companies are doing now. 5 years, NIO, they went public 2 years ago, okay? So you won't see full 5 years. 136% in 2 years. 1 year, 363%. That's 4.6x your money. 3 months, 332%, which means that most of the growth that NIO has been having has been in the last 3 months. Last 1 month, 13%. So if you'd have put $1,000 in NEO 3 months ago, you would have over $3,000. No, you have over $4,000 now, because 332 is 4x. You see? You see how this is happening? You see why the wealthy get wealthier? Why you see them walking around? Now, someone said, is NEO in my portfolio is cheap? This is what I want you all to understand. It has nothing to do with the price of the stock. It's a trick. You can have a stock that's $1 and Amazon is $3,000, but the price growth for Amazon is greater than the price for some growth for something that's 1%. That's $1 stock. It's about this number. Can you all see this? It is about this number, that. It's about this, not this. Because when you put your money in, it grows based on this, not this. Now you get caught up in this because you're saying it's cheap. It's likely to go up because it's cheap. But now that you have fractional shares, you can buy $14 of NEO, right? So it's not about how much stock you own, it's about how much money you got in and how much it's going to grow. I hope that I'm clear with that, because that's how beginners get into the stock market, and you just start buying stocks that are cheap and you're like, I want to get it because it's cheap. No, you want to get it because it has a rate of growth that is attractive. And the way you check the growth is the charts. That's what's important. Because you can have, like I said, you can have a stock that's very cheap, and I can show you examples of stocks that are cheap, but their growth level is very small compared to Amazon, which is very expensive. You all understand what I'm saying? So NEO is in my portfolio, and I've had it in my portfolio for about 6 months. And of course, I've been able to get more than 333% growth. Okay? I'm participating in the growth of NEO. Let's go to Tesla. And now this is going to be a more in-depth conversation about Tesla, because that's the stock that I've told people. I've been in this stock since 2015. The price is now $2,000. It's the most talked about stock. I'm just taking a second to look at these notes. Okay. All right, good. All right, good. All right. All right, here we go. So Tesla, which is look at this. You all seeing this? Remember what I just talked to you about the stock price and the chart? Look at this. Look at this. It's kind of flat. This is 5 years. It's flat. The price is 200. It's flat. It's flat. It's flat. It's flat. I got in 2015. I got in here. I got in here. Yeah, at 200, 2015. That's when I got into Tesla. And anyone checks my Facebook, when I got into Tesla, I made an announcement in 2015. Y'all need to get into Tesla. The reason is because I sat in one and I knew that it was the future. I knew it. I knew that anyone who sits in a Tesla is not going to want to get into another car. And we're going to talk about why it's more than just transportation, y'all. Look at this. It's flat, flat, flat. It starts growing. 2019, it starts taking off. We're into 2020. It goes down a bit. People start getting scared. People start selling their stock because it goes down. You see? It goes down a bit, so people are getting scared. But I'm just buying because I know what this stock is. I know what they're doing. We're going to talk about what Tesla is doing and why Tesla is different than any other company. A lot of people sold here. It reached this $900 and then it went down. You see, because we're long-term investors, we don't care. This is February 21st. It was at $900. Then it went down to 400 when the whole COVID thing started hitting strong. March 20th, it went down to 400. If you had Tesla stock, you'd have been worried. You'd have been crying if you were a novice. If you're someone who gets nervous. And I'm going to show you how we don't lose money in the stock market. I held on because I know what Tesla stock is and I'm looking in the future. I'm looking for 2025 when I buy Tesla stock and I'm just riding it. And March 20th hit, it went down, and then look what it did. Look what it did. Look how steep this is. Look how beautiful this is. It went all the way up, and it's at $2,000 now. So if you would have invested in Tesla 5 years ago, you'd have made 700% on your money. That is 8x your money, and it's going to keep going up, and I'm going to tell you why. And some of you who are my Facebook friends know that I made a post. So let's look at 1 year. If you put your money in Tesla a year ago, so if you timed it to a year, you'd be making even more than if you put it in 5 years ago. That's because the price went down. But over a year is where you saw most of the growth. So you'd have made 9x, almost 10x your money. 10 times your money in 1 year with Tesla. If you put your money in Tesla 3 months ago, you'd have made 146%, which is 2.5x. If you put it in 1 month ago, you'd have made 30% on your money. Okay? And what we do is every time we get some money, whether it's a paycheck or we get money in our business, we use the money that we need for our budget, for our living expenses, and we put the rest into our stocks. That's what I do. So I know what the budget is for my household, and I put that money aside, and the rest goes into stocks. I don't put it in a savings account because I don't lose money in the stock market, and I'm not going to make 0.1%. And I'm going to show you why I don't lose money in the stock market. So let's talk about why I don't lose money in the stock market before we get into Tesla heavy. All right? The reason why I don't lose money in the stock market is because of the distributive principle of algebra. And I'm going to show you. Y'all hold on to your seats for this one. This is a real example. I heard about a stock called Zynex. Zynex was doing really well. And this is just a month ago, by the way. So this is very recent. So I'm going to give you all like a real window into what happens. Zynex, if you look at the 5-year chart of Zynex, it looks good, right? 263%, but I'm seeing something. Look at that. I'm seeing some downward movement, but it's made so much money, it's still positive for the 5-year growth chart. 1-year growth chart is still at 57%. 3-month growth chart, 11% loss. So you don't put your money into this, but before the 3 months, this is what it looked like. It was positive 3 months ago, like a month ago, it was positive, or 2 months ago or something like that, but it passed my test until it took a downturn. Now here's where I bought, right here, as luck would have it. I bought it on July 10th when it was here. After July 10th, I started noticing the stock dropping. You see the price here? It starts going down. I'm like, damn, I'm losing money on this. So I put $1,000 into this stock because it's a new stock. And what they do is that they make medical equipment, particularly for pain management. And I saw that, okay, that is actually going to be a good business. If you can do things that decrease people's pain without drugs, that's going to be a great business. And I saw that their price chart showed it. They were doing very good in their 5-year prices, as you can see. Remember, I had only seen it up to here, July 10th. Right when I put $1,000 in, it starts dropping to the point where in this account, in this stock, I went from 1,000 to 700. right? Now, I want you all to pay attention to this because this might be the most important part of the conversation. And I'm gonna stop sharing it. When I saw it go down 30%, the average person would do one of two things. They would get nervous, number one, they would get upset. And what they would do is they would say, I'm going to wait to see if the stock turns around. Or I'm going to sell it and cut my losses here. You only lose with a stock when you sell it and you spend your money that's left over on bills. I'm gonna repeat that again. You only lose in the stock market when you have a loss and you sell that stock at a loss, cash out, and spend that money on a liability. Because that was $1,000 you could have spent on a liability, is now you spent $700. So you've actually had less money to spend on a liability. Okay? All right, look. So what did I do? Let's go back to the screen share. Okay. Unique, can you tell me, can you see the screen? Oh, no, you can't. All right, sharing now. Can you see the screen?
Yes.
Okay. What I did when I started seeing this go down too much, to my liking, you know what I did? I took my $700, I sold it, I hit sell, okay? You could just hit sell. You would just hit sell, because I don't have it, so I can't sell it, because I sold it. So there's no sell button for me here. But I hit sell, and I got my $700, right? Guess what I did? I moved the $700 and I bought Square with the $700. So let's look at Square. In the last 3 months, 19%. So I had lost I was lost like 30%. So I put it into Square in the last month. I've recovered my money. I'm on my way to recovering all my money. Because I saw how Square was performing. So those of us, so let me look at y'all, because I want to look at y'all. All right. Those of us who've ever done any planting or gardening, what we're doing is this. Let's just say you have a mango plant. Those of you know me that I'm partial to mangoes. So that's the example that I'm gonna use. You have a mango plant and you put it in the west side of your yard. You have another mango plant and you put it to the next part of your yard, the east part of your yard. You notice that the mango on the west part of your yard, the tree or the plant is growing very well. And then you look at the mango plant on the east part of the yard and you see that it's not growing at all, it's wilting. You got some choices to make. You can just cut down that tree and cut your losses. Or you can uproot the plant and put it into better soil. Because you've already seen that the soil on the west side of your property is better than the soil on the east side of your property. So now you uproot that and put it into more fertile soil. Now you've got that mango tree that was now dying, that was then dying and wilting, has been transferred to better soil, and then now it's in better shape after a week or two, and it starts growing. And then over time, you've got 2 mango trees that are producing instead of 1. This is the stock market, y'all. This is how you don't lose money in the stock market. You're monitoring your stocks and seeing which ones are growing, which ones are performing the best consistently. So if you get into a new stock, or a stock is starting to fall and the price is starting to fall, you sell that stock, take that money, and you put it into better soil. That's all we're doing. We're not here to play around. We're only in here to make money. We're here to grow our money. So if you use this technique, you'll never lose money in the stock market. And they'll say, nobody can tell you, no one can tell you you can't lose money. That sounds crazy. No, it's not. I just showed you what happened with Zynex. I was losing, but I didn't lose. I was losing, but I didn't lose. The only time I would have lost $300 is if I cashed out from $1,000 to $700, took that money in my pocket and started spending it paying bills. Now that money's gone. But when you move that money to a growing soil, you're always making money. So I haven't lost money with Zynex. I just moved that $700, and that $700 doesn't care where I put it. It just wants to grow. Just like that plant, that mango plant. It don't care where you put it. It just wants to grow. So it's up to you to put your money in the most favorable soil. If you start seeing that that stock is wilting, you move it into more favorable soil. Now let's get into Tesla and why Tesla stock is going to keep going up. Okay. Tesla I'm going to keep it on me and then I'll give you some examples. So Tesla is more than a car company. Tesla is an energy company, a transportation company, and an artificial intelligence company. What do I mean? And why a Tesla car is so important. I myself, I own a Tesla. And I'm going to tell you a story of what happened about a month ago. I was driving and there was 2-lane traffic heading north. So it's 2 lanes heading north and 2 lanes heading south, right? So I'm driving and there's a SUV on the left of me and I don't see it because I'm just sitting there driving, I'm talking, you know, wasn't paying attention. And I decided that I was going to go to the left lane. I went to just go into the left lane, and all of a sudden, I hear a red sound, a red light comes up in my car, and it starts whoop, whoop, whoop. The vehicle saw the other vehicle coming. Not only gave me a warning, but it took over my steering wheel and drove me into my lane properly and avoided the accident. And the SUV just kept going. I would have gotten into a very bad car accident because I was going about 50 miles an hour. This was just about a month or 2 ago. It took over my car when I was about to get into an accident. It took over my steering wheel. I felt the steering wheel move and it swerved me into my lane properly. And I was like, what's going on? And I realized it saved my life or saved some damage. So as a piece of technology, that car is over and beyond any other piece of technology that any car is offering. Now, the other thing that Tesla does is they do over-the-air updates because the car is run by software. So, for instance, I just got an update that they did something over there, over the internet, updated the software, and now my brakes in my car work better. I didn't have to go to a mechanic shop. I didn't have to go anywhere. All of the updates to the car are actually over the air. So you no longer have to go to a mechanic. They're able to upgrade your car like you upgrade your phone. This is on a whole different level. Now, the other side too is, I can, even yesterday I drove on the highway, I can set it to self-driving, and the car drove me 80% of the way to where I was going, and it'll switch lanes for you. So it has full self-driving, it prevents you from accidents, it does over-the-air updates, and it has superior battery technology, and it has a network of charging systems all over the country. Okay? So this is just the car side. But it's also a battery company, because Tesla is fully vertically integrated. What does vertical integration mean? Vertical integration means that you control all the aspects of your product from the beginning to the end. So like, let's say for instance, that you sell fish patties. Well, if you own a fish farm, you have vertical integration, because you actually, the fish come from you instead of you having to buy the fish from somewhere else. That's vertical integration, right? Like for instance, my company, Herbal Results, I make olive leaf extract. Owning a farm that grows olive leaf trees would mean that I have vertical integration, because I'm able to source my olive leaf. I'm able to source my olive leaf from me. Okay, can you all hear better now? Is it better?
Yes, that's better.
Okay, that's vertical integration. Well, Tesla manufactures their own cars. A lot of car manufacturers, they don't manufacture their own cars. They go to an outside manufacturer. Tesla manufactures their own, and they manufacture their own batteries, which is the most expensive part of the car, and they manufacture their own computer chips and software. They manufacture it themselves. So they have the complete industry on lock. They don't have to rely on third party, and they can control the price. And they can sell battery packs to other electric car companies. But here's the other side of it. And I'm going to show you the Tesla website, because this is important for you all to see. Tesla, you all can see the screen, right? Let me know, Munique. Can you see the screen?
Yes, the car.
Okay, thank you. You see the Tesla Model Y, right? That's the new Tesla that they did. This is like the SUV version of the Model 3. So these are the cars Tesla has. You have the Model S. And by the way, you can buy a Tesla online. You don't have to go to a car dealership. You literally configure your car online. You order now, they have it ready, they will deliver it to your house, or they will let you know that you can go pick it up at the Tesla dealership in your area. It's that simple. So that's a whole different model. So you can buy your cars online. This is the Tesla.com site. You can configure the car to the color you want, the color of the seats you want, whether you want full self-driving or not, you want chrome wheels, all of that, okay? But here's where it starts getting fun. I told you about there's no other car like a Tesla. I told you what it could do. That alone would take up the price of the Tesla stock. But they also do solar panels. They put panels on roofs. They have right here, $1.49 per watt is the lowest cost in America, and they give you money back guarantee. And then they also have a roof. If you want to change your roof, that's embedded with solar. So this roof here already has solar panels embedded inside of it. And it's cheaper to get this roof as a new roof with solar panels, where you're getting electricity from the sun, than actually getting a new roof and putting solar panels on it. So it's actually cheaper to buy this. Okay? Now, what also comes with it is a battery pack. And this is what's important. If you order it, it comes with what they call a power wall. You put in your address, you put in your monthly bill, and they will look at your roof and through Google Earth, see how much space is on your roof. They look at your monthly bill and recommend what type of package you should buy. And right now, the monthly, so it'll be like a 10-year loan with 0 down. And right now, looking at my monthly cost for electricity right now is about $300 a month. If I put the solar panels on my roof, which I'm looking to do, and the battery pack, and I'll let you all look at it, it's called the Tesla Power Wall. You can get a good look at it. Okay, this is it here, and images here. This is what it looks like. This is the Tesla Power Wall. Okay, this is a battery pack. This is a smaller one, this is the big one. And when you look at the prices, you can go off grid and pretty much the payment every month for 10 years will be the same payment that you're paying your utility company. I want to say that again. You can pay yourself through a loan the same amount that you're paying for your electricity bill for you to be off grid. But what's even more important is this. Now, here's the deal. These are run by lithium battery packs, and when you have too much electricity, it goes into the grid, and if most states have net metering. Most states have net metering, which means that when you put in excess amount of energy into the grid, either your meter turns backward or they will cut you a check at the end of the year. In Florida, they cut you a check at the end of the year. Many jurisdictions, they cut you a check at the end of the year. So what that means is that your house has become a power plant. You're paying yourself every month for this loan of full solar and off-grid batteries. You're living off of that. You finish paying in 10 years, and guess what happens? Your electricity is free. The panels are warranted for over 10 or for over 25 years. Batteries prices are going to keep going down. The price and the value of your house goes up when you add solar. So you mean to tell me I can pay the same $300 a month that I'm paying to a utility company and pay myself instead for this solar thing? Yeah, it's all traded under Tesla. It's not just cars. Tesla's not just cars. So the price of my house, the value of my property goes up because I have solar. I'm paying the same amount that I'm paying for electricity. I get free electricity after 10 years. I get money from the power company when I go out of town or go on vacation, because I travel for 6 months at a time. My houses will be empty. I'm actually making money when the sun is shining. You see? Now, why is Tesla's price going to keep going up? Here's why. And let me put this, stop share. This is why Tesla's price is going to keep going, because a lot of people are saying Tesla's overvalued. Tesla, the price is so high right now, if you get in it, the price is going to drop. But remember, we are long-term traders. We're not day traders. We're in for the long term. And so the question is Tesla's value going to increase or decrease in the next year? That's the judgment you're going to make. And let me tell you why the Tesla price is going to go up. Number one, Tesla is about to have a stock split. A stock split means this. Companies do stock splits because the price gets so high, it gets intimidating. So if one share is $2,000, like someone was saying, oh, it's more intimidating, let me get this cheaper one. Remember, it doesn't matter, it's based on the percentage growth. But now that you have fractional shares, you can buy $1 of Tesla and still get the percentage growth. The year percentage growth, if it's 200%, you'll get 200% on your $1. If you put 1,000, you get 200% on 1,000. So what they're going to do, and it's going to happen on August 31st, they're going to do a 5-for-1 split. And the 5-for-1 split is going to go like this. If you own 1 share of Tesla, you're going to own 5 shares of Tesla, just overnight. But the price of the Tesla stock is going to go from 2,000 divided by 5, which is 400. So you will have 5 shares of Tesla. Remember, you have 1 share and you have $2,000 of value in your investments, right? Because you have 1 share of Tesla. On the 31st, you're going to have 5 shares of Tesla at $400 a share, which will equal 2,000. So you'll still have 2,000, but it'll be $400 a share because the price is less intimidating. But the investors who are invested will get more, but will get more shares, but your price will be divided by 5. You get it? It's like an accounting trick. They raise your shares on one side of the equation and they lower the price on another side of the equation, and it equals 1 to 1. 1 share to 5 shares, 2,000 to 400. 1 to 5. You all get that? Somebody shake their head up and down if you got it. Okay. Now, yes, you'll get 5 shares automatically if you own 1 share, or if you own half a share, it's just times 5. But the price of the share will be divided by 5, so that you will still have, yeah, Apple as well, but you will still have the aggregate amount of value that you had the day before. So if you had $2,000 worth of Tesla, you're still going to have $2,000 worth of Tesla. It's just that 1 share will be cheaper. You'll just have more of it. This causes people to buy. Historically, with all stocks, whenever there's a stock split, more people buy. What I've also found out is that historically, whenever a stock split is done, the stock goes back to its original price of the stock split. So that means that when you get your 5 shares at 400, eventually it's going to go back to 2,000, which means you're going to have 5 shares at 2,000. So you're going to make a 5x just sitting on Tesla stock eventually. It may not be this month, it may not be next year, over time. Stock splits have reached their original prices. That's number 1. Number 2, Tesla has shown profit in the last 4 quarters, which qualifies it for the S&P 500. The S&P 500 is a listing of index stocks, which is like the top 500 performing stock companies. And it's an index fund. So a lot of people tell you, if you want to make money in the stock market, just put your money in an index fund. Index fund performs with the rising rate of the top 500 companies in the stock market, and the average price is about 8% a year. So you can put your money in an index fund and just keep it there, and you're going to get pretty much 8% a year. It takes the top 500 companies and it averages all of their rises, and that's what you get. Okay? Now, what happens is this. The index funds, the S&P 500 index fund, index listing. So you have a index fund called Vanguard. Okay? No, index funds and ETFs are completely, they're different. ETFs are stocks that are picked by a particular investment group or a person who has an ETF, exchange traded funds. So they might have 50 stocks in their portfolio that they pick themselves. The S&P 500 is the top, I'm going to tell you all about the best time to buy. I'm going to give you all the best time to buy. But I need to explain this to you all so you understand why I'm about to say what I'm about to say. The index funds are the top 500 companies. And to qualify, you have to be the top 500 in terms of stock growth, and you have to make profit for 4 years straight. Okay? That's pretty much the rules. Tesla has qualified this quarter for that. So they're about to have an S&P meeting, committee meeting in September. The S&P index funds is a $4 trillion market. So fund managers for index funds have $4 trillion that they must put into the stocks that are in the 500. So even if they hated Tesla stock, some of that $4 trillion has to be equally allocated into Tesla, which means that you've got $4 trillion worth of money, and a percentage of that 4 trillion, not billion, trillion, has to be pumped into Tesla stock, most likely in September, which is going to cause the price of Tesla to rise. So you got a stock split, and you got S&P 500. But then something else is about to happen in September. On September 22nd, Tesla is going to have the annual battery day. Elon Musk, now this is what you do. Where do you get all this information, Harold? Where do you get all of this? You know where I get it? I get it from Twitter. Why do I get it from Twitter? Why don't I get it from CNBC, Wall Street Journal, all of that? Because I told you they're biased based on whoever buys their advertising. I go to Twitter because Twitter gives you direct thoughts from the person. Elon Musk has a Twitter, and he'll tweet. The head of all of these companies have their own Twitter. And they're always going to tell you good news. So you get the first information. And a lot of times I find out that Elon Musk makes a tweet, and a month later they'll report it in Forbes. A month later they'll report it somewhere else. But if you can read his tweets, you can understand. I'll give you an example. A year ago, Elon Musk made a tweet, and he said, I think Tesla stock is too high. Okay? A lot of people were mad who were Tesla investors. What, you want the price to drop? That's crazy, that's crazy. They didn't understand what he was saying. He didn't say that he thought that Tesla stock was overvalued. He said he thought it was too high. He was giving you a hint that the price was getting so high that they were growing so fast that the price was going to be intimidating to future investors. So he was telling you a year ago that he thought that Tesla should do a stock split. He literally was saying that the price was too high, not that the price was overvalued. There's a difference in the two. People who weren't able to read into it thought that he was saying it's overvalued. He was saying the price is too high. So because the price is too high, there's one thing that you can do about it. You can do a stock split to make the price lower. But it doesn't change the value. And guess what? We're doing a stock split. Okay? There's a difference between the price is too high and the price is overvalued. He gave a hint. And those of us who knew this. And guess what he said on his Twitter? He said, Battery Day, happening on September 22nd, is going to be the most exciting day for Tesla in terms of technology. What does that mean? That can only mean three things. Remember, it's Battery Day. That means that they've got a new battery technology that either makes the price of batteries cheaper, or they've got new battery technology that makes the energy density of batteries greater. So you'll be able to get more out of the battery. That's one. They've either got a technology that makes the price cheaper, or two, they've got a technology that makes the batteries more efficient and more powerful. Or three, they got both. This is a person who has put rockets into space.
because his other company is SpaceX, and he solved the problem because it was too expensive to put rockets into space. He got a way for them to go into space and for them to come back down. Anyone can look at it. They come back down in reverse. He figured out that technology. And for him to say that it is going to be the most important day in Tesla history in terms of technology means on September 22nd, the price of Tesla stock is about to go up. That's why I told everybody in my Facebook post, if you can and you want to print money, buy as much Tesla stock as you can afford. I've said this for a couple months. I posted it like 2 weeks ago. Because I told people that between now and October, millionaires are going to be made. Just with Tesla stock. Between now and October. The reason is, after September 22nd, you're going to see the price of Tesla shoot up. More than you're even seeing it now. Because of those three things. The stock split, S&P 500, and battery day. Elon Musk knew that this was going to happen. He knew that they were going to qualify for the S&P 500. He knew that this battery day is going to be huge, so he did a stock split so that the Tesla price, because if he doesn't do a stock split, it's at 2,000 now. After September, it's going to be at 4,000. And then it looks more intimidating for people. So he did a solid for new investors to say, I'm going to make the price cheaper for you all so it doesn't look so intimidating. That's what he did. So now you all know the gossip. That's fundamental analysis. Okay? This is fundamental analysis that I just gave you all. It's the gossip. And I get it straight from the horse's mouth. I don't go to anybody else. So any stock that you're interested in, Amazon stock, follow Jeff Bezos on Twitter. Facebook stock, follow Mark Zuckerberg on Twitter. Go directly to the horse's mouth. Do not go to the people who are reporting about the horse, who got biases about the horse. That's where I get my up-to-date information from. That's where I know what's happening, because I just go on Twitter. And every CEO is going to give you their good news. They might not give you their bad news, but they're going to give you their good news. And then you look out to see if it's meaningful. But what I'm telling you is that if he's telling the world that it's going to be the biggest day in their history in terms of technology on battery day, it only means one of three things. Batteries have gotten cheaper to make, batteries have gotten better, or both. If they've gotten cheaper to make, there's a thing called Moore's Law. Moore's Law means that the price of technology gets cheaper over time, and the efficiency of the technology also gets better. There's another law that deals with the efficiency and the size of technology. Like the size of a computer chip will get smaller over time. That's another law. The name escapes me right now. Some people might know it already. It has to do with computer chip size and memory. Moore's Law, yes. There's another law that, every 18 months. There's another law that talks about the price of technology. And when it hits critical mass, it creates an upswing in demand because it becomes affordable for the average person, right? There's no point in having an airplane if only 2 people can fly on an airplane. But when airplane technology gets to the point where the average person can buy an airplane ticket, now it shoots off. Okay? So right now, battery technology is at a critical mass in terms of price. And if the price gets lower, the main cost of solar is that battery, not the panels. So if the cost even gets lower, that's why I'm waiting till after battery day to get my solar kit, to get my solar on my roof. Because I know that the batteries are going to get better after September 22nd, and I'm going to wait. Why buy the batteries now? If the price goes down by 20% for batteries and the efficiency even goes up by 20%, Everybody's going to get Tesla solar panels with a power wall because you'll become an energy producer where you've increased the value of your house. You get free electricity after 10 years and it's paid off. You don't pay your utility company, they pay you. It's a no-brainer. That's bigger than cars. You become a power plant. And then the cars get cheaper because the batteries prices go down. So now more people can afford to buy Teslas, which take their profit margin even higher. And their profits even higher, which then increases the price. Ladies and gentlemen, this is what you call the perfect storm. It doesn't get any more perfect than this for a particular company in a stock. You don't have to believe anything I'm saying. You don't have to do anything I'm doing. I'm just telling you what I'm doing. And I'm showing you the results. I had a friend who was arguing with me on Monday, saying that she was waiting to get into Tesla because she thought that it was going to fall before the stock split. So she was waiting till after the stock split. I told her, you better get in now because from now until September 28th is going to be the lowest prices that you're going to see in Tesla, even with the stock split. I don't take the $400 price as the lowest price because it's 5-to-1. After the split, that's going to be the lowest prices you're going to see Tesla because people are going to buy because of the split. Not only that, the fourth thing I forgot to mention is that now you have what you call retail investors. Retail investors are you and me. There are two types of investors, retail investors and institutional investors. Institutional investors are the banks. The banks were able to control the stock market by buying and selling huge volumes at one time because they were the only ones who owned 1 million shares of a stock. Those types of funds. Now you have Robinhood where the average person can buy and Cash App and the average person can buy. So if you've got 1 million people buying $20 worth of Tesla because you can buy fractional shares now, you've had a $20 million influx into Tesla now, which makes the price go up with just the average everyday people. So right now you're in a whole different time where the banks and the institutional investors like Goldman Sachs, they don't have as much power as that they used to have. You and me now, that's why when you hear them talking, when you get deeper into it, they're going to say Robinhood investors on CNBC. You hear them talking, they'll use it in a pejorative way because they're mad that Robinhood investors are influencing the market more than banks. So now you've got all of these people getting the ability to buy fractional shares when they haven't before. And now they're able to buy fractional shares of Tesla at 10, 20, 30, 40, $100 at a time. And you got 1 million people doing that. That's $100 million going to Tesla stock in one day, where this couldn't happen last year. You all get what's going on now? Nobody's going to tell you this. Now, I'm going to show you all a couple people that I follow on YouTube where you can get information on different stocks, some of the best people. And all of this is free information, by the way. So let me get to sharing the screen again. And let's go to this guy. Okay, this guy here. This is a guy from Australia, a regular guy, YouTuber. His YouTube channel is Solving the Money Problem. This is a guy who 6-7 years ago had a net worth of like -$8,000. He decided to get serious. He invested in some real estate and then got into stocks because real estate was too cumbersome, as I talked to you all about at the beginning of this. So what he did was he got into a Tesla in 2015 and saw that it was the future, and he went all in on Tesla. This guy right here is called Solving the Money Problem. So I'm going to give you all just part of the video that you all can look to. This is very important. It's called Solving the Money Problem. It's on YouTube. Subscribe to him.
He's big on Tesla. He talks about why. But let me just tell you all his story. This is a guy who bought 200 shares of Tesla a year. So every year, he would just, every month he would put money into Tesla and slowly accumulate Tesla, right? By the end of the 2 years, by the end of the 5 years, because he bought 200 shares a year, he now has 1,000 shares in Tesla stock. Let's do a calculation. Tesla. Having 1,000 shares in Tesla stock, he had this in, let's go to the 1-year chart. Yes. 1,000 shares on June 29th. Tesla went to, you all see that? Can you all see that? Someone can type in if you see this.
Yes.
Yes. This guy accumulated quietly 1,000 shares of Tesla stock. By June 29th, 2020, Tesla hit $1,000. If you have 1,000 shares at $1,000, how much money do you have? Someone tell me. Someone just type it in. Do the math real quick. No. 1,000 shares at $1,000. Someone do the math. It's $1 million. So this guy who I'm showing you on his channel, sitting there with his hat turned backward, this kid, because he knew what to do and didn't listen to all of the pundits and understood where the technology was going and where the future is going, he just bought Tesla stock, where he's sitting on 1,000 shares and it hit $1,000, right? So he's sitting on $1 million cash, because he can sell it tomorrow. He can sell it on Monday and get all his cash. This is the thing about stocks. You can have a house and you can have a house make $1 million profit, but it might sit on the market for a few months. So you can't get your cash. Okay? Yeah, you can go to his page, Ali, and he talks about it. There's a video that he talks about it. He goes in depth on it. Okay? Because I don't want to be on this for 10 hours, I can't go through everything. His average price was like $300. But look, this is what's really important. So on June 29th, he wakes up in the morning and looks at his account and sees that he has 1,000 shares at $1,000, that his balance is $1 million. He's sitting on $1 million cash. On June 29th, guess what happens? From June 29th to, with him buying no more shares, from June 29th to August 20th. That's 2 months, y'all. What is 1,000 shares at $2,000? Someone do the math and type it in. If you own 1,000 shares and now each share is $2,000, how much money do you have? Someone type it in. $2 million. So that guy's sitting on $2 million. And in 2 months, doing nothing but eating cheesecake and taking walks at the park, his stock value increased from 1 million to 2 million. He made a $1 million increase off of 1 million in 60 days. Ladies and gentlemen, this is why the rich get richer and those who invest get richer. And this is what we've been kept from, and no one's been telling us this information. That even if you had, let's just say over time you had 100 shares in Tesla. At $1,000 a share, that's $100,000. And with those 100 shares, it going to 2,000, you'd have $200,000, which means that you made a $100,000 profit in 2 months from doing nothing.
Okay? Now, I'm gonna play a little video of his for you as to missing out on Tesla stock is the biggest mistake you'll make. And here's why. So we're just gonna play a little bit of the video.
Missing Tesla will be the greatest mistake you'll ever make. Stephen, this is
Can you all hear his audio? No?
Really?
Let me see if I can turn it up.
And I'll add some comments where I think it's relevant. Let's dive in.
Can you hear the
If
audio?
you're in the US and you'd like up to 2 free
It's pretty low.
Huh.
you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400.
Is your computer volume at its highest? Your own.
I've taken the volume up as high as it can go.
Ross, I'm so glad.
Can you all hear anything?
To discuss this morning. You've been our test.
A little bit.
All right.
Yep.
Okay, you can hear, but it's low.
55%, and it's up
Okay.
over
Let me take off my headphones.
when this stock split was announced right after the bell.
Let me take off my headphones so you all can hear this and see if you can hear it better, okay? All right. Can you hear it better?
It's choppy, and I don't know if there's any sound. Or maybe you could just copy the link and put it in the chat. We
Better
can,
than before, right?
yeah.
Yeah, that's the best I can do. Just try to listen. No audio? Hold on. They're saying, let me change my sound preferences. Let me see if I can go into settings. Okay, hold on. Let me go into my audio. Output is, okay. Mic volume, I'm going to adjust. Let me put this on, and I'm gonna make the mic volume. Okay. Let me see if I can adjust the volume. For some reason it's not. Okay. I increased that there, there, and there. Okay. It's adjusted, and that's the output. Okay. All right. Now tell me if you all can hear this better now.
I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're talking a little bit more about the Tesla stock
It's better?
and what it means for investors. We're going to watch a few
Okay,
clips cross
great.
over, and I'll add
That's
some
it.
comments where I think it's relevant.
Okay.
Let's dive in. Hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to Webull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the
All
UK,
right. You don't need to hear
I'm
that.
so glad you were available to discuss this morning. You've been our Tesla bull for
Okay.
ever. It's up
Just
over
let me
255.
stop you all there. The jargon is if they call you a bull, that means that you think that the stock price is going to increase. If they call you a bear, that means that you think that the stock price is going to go down. Okay, that's just a little investment lingo. All right, bear means that you think the price is going to fall. Bull means that you think that it's going to go up. All right.
5%, and it's up over $1,000 since yesterday when this stock split was announced right after the bell. Did you expect it? Do you love it? What are your concerns?
Well, we were actually asking Tesla to split the stock for a couple reasons. So we had reached out to the company and spoken to investors relations about the fact that when the stock is so high priced, it's so hard for smaller investors to buy shares. And despite many firms offering slices of shares, that's a very high cost way for investors to own shares. So this makes a lot of sense for Tesla for a lot of reasons. One, it increases their shareholder base and it spreads their shares among more people easier. And two, that creates more stability for the stock longer term. And that also hurts short sellers' ability to get stock as well. So, you know, this is a great move for Tesla. It's also symbolic of basically everything going right for Tesla right now. So we've come a long way in a year, and we're very, very bullish on Tesla.
For those of you at home keeping score, since the announcement of the Tesla stock split, the stock has moved up 18%. Who knows if this ends up coming back a little bit or continuing on? I don't know. But the point I'm trying to make here is that if you think about it logically and reasonably, it makes zero logical sense. Nothing fundamental has changed about Tesla or the company itself, right? Nothing's changed. The stock price is now up just because they've announced they're doing a stock split. Completely illogical, completely irrational, but completely understandable. More liquidity. Now, younger investors who couldn't get into the market because they simply couldn't afford Tesla stock and didn't have access to fractional shares now have the opportunity to get into the stock. However, it is worth considering that none of those investors are already buying the stock because the announcement has been made, but the split hasn't taken place. That's still a couple of weeks away. So who's buying the stock now? These are investors, I think, that just like the idea of this new crowd coming into the stock in the future. Quite interesting, the dynamic going on here, because it isn't a direct result of these new investors getting into Tesla stock that's pushed the price up. So what happens at the end of the month after the stock splits and all these new investors can now be paying a few $100s instead of over $1,000 for Tesla stock? Let me know in the comments below, what do you guys think will happen to the stock after the split actually takes place? Do you think we'll see it continue growing? Do you think it's going to go down, go sideways? Who knows? Spoiler alert, nobody does, but hey, leave your guess below. Might be right.
It's amazing because what we saw with Apple was the run up. It was below $400 when the stock split 4-for-1 was announced, and it's been running up, you know, until that August 31st date when it actually really happens. Are you surprised to see Tesla running up now? It's up about 8%. How high do you think this can go ahead of the stock split, which is set for the end of the month?
Well, you know, Tesla stock is obviously highly valued, and for good reason. So I can't really tell you if the stock's going to go higher or not. Obviously, that would just be speculation. But I think that when you look at Tesla over the next 2 years, and the fact that the Gigafactory in Berlin is moving along nicely, and they've already started in Austin for the truck factory and another Gigafactory, and I think those will both be done in 2 years in producing vehicles. Tesla can more than double its size again and dominate the EV and energy industries over the next 5 years. So I think if you're a long-term investor, missing Tesla will be the greatest mistake you'll ever make.
I'm in complete and utter agreement with Ross here. For those of you who don't know, Tesla stock comprises well over 90% of my stock portfolio. I know a few of you are going to be like, what the hell, this guy's insane, what an absolute moron, haven't you heard of diversification? You do not need to worry about me. I'll be okay, all right? I've got a pretty good track record with investing. To be clear, I do actually own some real estate, but this wasn't me trying to diversify. I went all in on real estate for about the first 7 years of my investment career before I diversified into stocks, okay? I'm not saying that you should or shouldn't diversify, but for me personally, I would much rather specialize and know what the fuck I'm doing than try and scatter my money around the place because I'm scared that I'll fuck up too many investment decisions, and that's the only way to protect myself. With that being said, there's a reason that I'm so heavily concentrated in Tesla. It's because I genuinely believe this is a once in a decade, once in a generation opportunity to invest in. I have not seen another opportunity like this in more than a decade of looking at investments.
I think if you're a long-term investor, missing Tesla will be the greatest mistake you'll ever make.
Wow, a lot of people said that about Amazon or Apple.
Yeah, and Apple. And I rode Apple my whole career.
In size.
I'll be honest, you know, your previous guest was talking about something that we do at Gerber Kawasaki, which is concentrate on technology. There's no doubt after 27 years of investing that if you're not invested in the best U.S. technology companies, you will never gain the kind of wealth that you have the potential to gain. So stocks like Apple a decade ago, you know, Tim Cook has guided the company so successfully. And now we look at a company like Tesla just beginning its run. If you miss these companies, the Amazons, the Googles, the Teslas, you're never going to reach your financial goals. So I think we're seeing investors realize how few companies there are like Tesla, and that's why it has an extreme premium.
Ross is just dropping truth bomb after truth bomb. And again, we're totally on the same page. I just checked for you guys. My stock portfolio, 99.04% is comprised of 3 US tech companies: Tesla, Amazon, Google. 99.04% of my entire stock portfolio in 3 US tech companies. And my returns are absolutely ridiculous. Of course, I've only owned stocks for around 4.5 years. So Who knows what happens in the future? But I'm making a bet, literally, that they'll do a little bit better than the overall market. That's why I don't own garbage. I don't own the old world. I don't own dinosaurs. I don't own fossils. I don't care about the past. I care about the future. And if it doesn't involve tech, it isn't the future.
So when you talk about how few companies there are like Tesla, EV is very hot, right? And I know they're not Tesla, but NIO, Nikola, just to name a few names that have been of late, right? The names of late, Workhorse. These names have come up. Even today, we heard one analyst say that NIO could be the Tesla type of thing of China. I know you think it's laughable, right? But what is it that you love about Tesla? What is Tesla going to do? Elon Musk with his genius vision, and that's why people love Elon Musk. I'm not even sure if he weren't at the helm, if people would believe in Tesla the way they did.
No.
What model do you love? What is the genius behind Tesla going forward?
Well, I think what this is really about, and Elon talked about this long ago, it's the factory is the factory. It's like, how many factories can we build that can produce EV batteries? The real thing about EVs, and what I learned through all my time at Tesla, was how difficult it is to scale battery production and do this reliably and then mass produce a car out of it. So I think all of the Tesla competitors, as much as I'm rooting for them and I want EVs to be successful, none of them have been able to make their own batteries, and none of them have been able to scale their batteries. And in the case of Nikola, they've got a whole nother system under using hydrogen, which I don't even think works very well when you have to build a whole new infrastructure. So right now, Tesla is the only horse in this race, and all the other players are niche players at best, like NIO. NIO makes a nice car, and maybe they can make money, but can they make 500,000 or a million EVs? No chance. And so Tesla's on the road to 1 million cars a year in the next 2 years. And I don't think there's anybody that can do that, has the technology. And that's what it's really about. Elon is an engineer. In his heart, he is an engineer, and none of these other CEOs are. So they just don't get how difficult this technology is to achieve.
This is a super important and often overlooked point. Having a CEO who is an engineer, but beyond that has a degree in physics and literally understands the universe from the atoms up gives you an enormous advantage when the core of your business is innovating in disruptive technology, new engineering, new ways of doing things more efficiently, better. The key here is engineering. Most other CEOs out there have a ton of blind spots because they do not have the physics understanding, the engineering mindset to actually see how can these problems be solved at a fundamental level. They rely on other people to tell them how do we get from here to here. This is why so many CEOs of most other automakers out there had their blinkers on and been completely blind to the fact that it was urgent that they immediately invest heavily in developing electric vehicles. They're all f***ed now because they waited too long, because they didn't know what they didn't know. This is why Tesla's so far ahead. Most of these CEOs are still asleep at the wheel. They're not engineers. They just don't get what's happening right now. They just can't see it. They're blind to it.
And you've said that about Nikola before. When you and I have chatted, you just didn't have a lot of faith in that company.
So I'm gonna stop it there. I don't need you all to watch all of it. You can watch it on your time. I don't want to take too many people's time, but you get the basic essence of what they're saying here. That if you miss out on Tesla stock, it's the biggest mistake you'll make. You have the convergence of 3 major technologies under one company in a time when you have a convergence of technology. So basically, investing in Tesla is like being in the 1900s and investing in a telephone company, like the #1 telephone company when telephones just got invented, inventing in the #1 automobile company when cars started being manufactured, and maybe inventing in radio technology with the #1 company, right? So, or an airplane company, right? Tesla, like you would have made a lot of money if you invested in any one of those things, one of those 3 things in the 1900s. Tesla now represents all 3 of those things in just one company. That's what's so scary about this. That's why the growth, I predict, is going to be more hyperbolic than what you've seen now. So I'm not saying, put all your money into Tesla. I'm not going to tell you what to do with your money, but a good part of my portfolio is in Tesla. Over 60% of my stock portfolio is in Tesla. And we just keep making money. And like I said, I told you the strategy is if I start seeing the stock go down a lot, I just go ahead and transfer that stock into something else that's growing. So I never lose money because, you know, it's about patience. If you get into the stock market, you don't have patience, you're impatient because you're trying to get a quick flip in a week, then you're going to make terrible mistakes based on the fact that you're getting nervous. Patience is the key. To have the time is how you're going to make the money. And Warren Buffett, who's like a legendary investor, he has a quote that says that the stock market is a vehicle that transfers money from impatient people to patient people. And that's true. That if you're impatient, you think that you're going to make a quick lick and the price has gone down, you're going to end up selling that stock and walking away, but you're selling it to someone who's buying it at that price, who's going to wait for the price to go up. So the key is patience in all of this, and then to know what the future is going to bring. That's why I wanted you all to watch Black Mirror. Now, what I'm going to do is I'm going to introduce you all. As I mentioned, Warren Buffett, I'm going to introduce you all to the Warren Buffett of today. And her name is Cathie Wood.
At least not right
She's
now.
a very, very,
They say they can.
she's a very, very important person. Like, she's one of my favorite people that I like to listen to. She's an investor and she invests in what you call disruptive technologies. And this is Cathie Wood. And this was her talking about Tesla, but she talks about her investment approach. Now, she has an ETF, which is an exchange traded fund. Basically, ETFs are a bundle of companies that she picks based on innovation. And her ETFs perform better than all of Warren Buffett's companies in his portfolios by like factors. So she's outperforming everybody. So maybe you all should, if I can say, how Cathie Wood beats the market. Okay. This is her here, and this is this guy talking about Cathie Wood. This is a person that you all should follow on Twitter. You should go online and follow Cathie Wood. That's how you spell her name. Her fund is called ARK Invest, A-R-K Invest, and it has different funds that she has. You have ARK W, ARK Q, and we can go over that in a second. But this is somebody that you all should listen to. Cathie Wood should be playing in your house more than news about Beyonce. Cathie Wood should be playing in your house more than really politics. You go ahead and vote for whoever you're going to vote for, but that's going to be done. You're still going to have to pay your bills. You're still going to have to think about wealth for your family and generational wealth. And you will see the climate of the conversations of your house change when you start playing people who are actually adding a return on your investment of your time. So let's just listen to something about Cathie Wood so you all get to know who she is, okay?
Tesla investor, she has been Cathie Wood has been described by some as the best investor you've never heard of. Now, as a famous Tesla investor, she has been featured on TV a lot recently, so you probably have heard of her by now. But what you might not know is that over the past 6 years, she has been one of the top performing investors around. Her actively managed ARK Innovation ETF is the best performer among 584 funds with at least $1 billion of assets in the global equity market, crushing the likes of BlackRock with an incredible return of 165% in the past 3 years. And she beat 99% of the other funds since ARK first became a registered investment advisor in January 2014. In fact, if we just look at the chart below, we can see that her fund isn't just the best performing over the past 3 years. With a return of 165%, they are over 40% above the next fund, which is a larger gap than there is between number 2 and number 10. Here we can see our fund's performance against the S&P 500 and the NASDAQ composite. Again, it's pretty clear to see that her fund has drastically outperformed the market. Oh, and just to be thorough, this article was published on February 18th earlier this year. Well, this chart shows the fund's performance in the months since, impressively climbing from a price of $59 up to $83 at the time of recording. Okay, so we're not doubting Kathy's credentials. Her performance over the past 3 years has been nothing short of incredible. So let's take a look at how she's done it. In this video, we're going to be looking at Kathy's investing style and how she's managed to generate such outsized returns. Let's hand it over to her.
Well, in 2014, really before that, I was observing and had been observing that since the telecom crash, tech and telecom crash in the early 2000s, and then the 08-09 meltdown, the crisis, we've been witnessing increasing moves towards passive investing or benchmark sensitive investing, which is almost the same thing in my mind. And at the same time, we were witnessing the search for innovation increasingly occurring, especially for large asset managers in the pre-IPO space. And so I saw a void opening up, both in terms of research and
Pre-IPO space, he's talking about private companies that have not been listed on the stock market yet. So just, all the big words, I don't want you all to get confused by it. She's just talking about people who were looking at private companies that were doing well before they got listed in the stock market.
Investing in innovation in the public markets, and I wanted to fill that void.
Okay, so this first clip is interesting, as it goes along with Michael Burry's theory that there is an index fund bubble. So he's made the point in the past that because so many people these days are simply buying a passive index fund, it can actually distort the market. Companies that make it into, say, the S&P 500 will have their shares bought by anyone who buys an S&P 500 fund. It doesn't actually matter if the company is deserving or not. Because there are so many investors passively investing today, it actually creates opportunities for the active investors. So if you work hard enough, you can find the companies which have been left behind by the distorted markets. Now, don't get me wrong, it is extremely difficult to do this still, and that's why I'm a big fan of index funds. But factors like this do create small pockets of inefficiencies in the market, which the experts can find.
Technology is seeping into every sector, so it's blurring the lines between and among sectors. And the 5 innovation platforms that we're focused on, they're converging. So we need analysts very comfortable with technology, even in the healthcare field and the industrial field. And we need their responsibilities to be broken out by innovation platforms that cut across economic sectors. So a stock like Tesla, now being analyzed in the traditional world by auto analysts, which are analysts focusing on a very mature industry. They're value analysts, right? So price to book, dividend yield, all of those metrics are important to them, are going to find it difficult to analyze a company that is not just an auto manufacturer, but also an artificial intelligence chip designer and an autonomous taxi platform provider, which is a transportation as a service. So we've got 3 analysts focused and collaborating on understanding.
So that's her telling you all that when you analyze Tesla, you can't do it by the regular analytics of saying it's a car company. They make chips, they do energy. So that's what she's trying to say. I just wanted to give you all a sense of her. It's a little bit boring, to watch it all, but I just wanted you to know who Kathy Wood was, and then we can start to look at her fund and analyze her fund in terms of the price chart of her funds. So this is a person you should keep up with. I might play one last thing. She's the one who predicted in like 2017 that Tesla stock would reach about $1,000, and they laughed at her. They literally laughed at her at the CNBC panel. And this year, it reached $1,000, like she said. So she predicted it correctly. So here she is talking about Tesla, and she thinks that it can hit $15,000 in 2024. So just listen to what she says here, and then we'll just look at her fund, and then we'll start to wrap it up, and I'll take some questions.
But preface that, Tesla's wild ride has left many of the analyst community in the dust. Check out where analysts stood just a year ago on this stock. Average price target was roughly $300 a share, just above where shares were trading at the time. Today, the average price target is closer to $500 a share, and that's more than 30% below where the stock closed today after that distinct sell-off. Next guest thinks Tesla has room to run. In fact, she thinks Tesla could hit $15,000 a share within the next 4 years. Let's bring in ARK Invest CEO and founder Cathie Wood. Cathie, welcome. I know $15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of
This is her talking at the beginning of the year when Tesla was $700, okay?
24, it's $7,000. And we've arrived.
She's saying that the lowest price that she sees Tesla being in 2024 is $7,000 a share. She's about to explain why. She said that's the lowest case. That's what they call the bear case.
At that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
So you take out your lowest probability scenarios, you take out the ones that you think just aren't going to work, or the highly outlandish ones where everything has to click exactly right. On what bricks is this $7,000 foundation founded? Is it improving margins? Is it lowering the cost of production of the vehicles as they get up to scale, or what?
Yes, there are 3 sources for the increase in our estimated price target. One is, as Tesla killers entered the market last year, we expected Tesla's market share to go down from 17% globally.
When she says Tesla killers, you're talking about other car companies making electric vehicles who are saying that they're going to kill Tesla because they're now entering the market, like Volkswagen or BMW or what have you, okay? That's what she means by Tesla killers. That's why she put it in quotes.
From 17% globally, that includes China, to something lower. Instead, it went up to 18%. And the reason is
17% in electric vehicles or in all vehicles?
No, electric vehicles.
Electric vehicles.
This is global. There are many electric vehicle manufacturers in China. Very low quality, but very. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles. Their battery cost is 3 years ahead, 3 to 4 years ahead of any other auto manufacturer in terms of the cost declines. And so every other auto manufacturer will, if they want to be competitive with Tesla, and I'm including BMW and Daimler and all, if they want to be competitive, like for like, they will have to sell their cars at a loss. At the same time, they're losing their internal combustion engine business. So they have.
Do you all hear that? That she's saying that for them, Tesla is so far ahead of them that if they want to compete with Tesla, they would have to sell their electric vehicles at a loss and at the same time stop selling internal combustion engine vehicles. So Tesla's got them all in a checkmate.
Have a big problem. So
are you confident enough in their ability to overcome what I would call sort of manufacturing hairballs that have struck them in the past and caused them to miss or delay production targets?
So nothing is in a straight line, you can't promise, but what they did in Shanghai was unbelievable. Breaking ground and producing within a year. And I think they're taking those learnings elsewhere. In Germany, outside of Berlin, we've been thinking, okay, that's a setup for bureaucracy. They have been welcomed with open arms because Germany doesn't want to lose the auto industry, right? And they don't want to lose the jobs. So, and now we're hearing potentially about Texas. So we think they're going to surprise on the production side now. It took a lot of trial and error, just like with their Falcon rockets. When they were trying to land them, it was failure, 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 then success. And now they've been successful pretty much every time since. So I think they've gotten the manufacturer.
Cathie, when you take Tyler's question to the next level, do you dig in and get granular on the opportunities when you look at the sum of the parts? Is it going to be panels, autonomous drive, or batteries that are the new breakout? Because when we look to Tyler's point, when we look at the cars in production, everyone thinks they're an expert on what they can and can't do with Tesla. But is there going to be shockers going forward where there's going to be a breakout valuation on batteries because their technology is so far advanced?
Yeah, I think they acquired a company called Maxwell Technologies, and they've been very secretive about what that is going to do for their battery technology. So what I just said to you does not even incorporate Maxwell. So yes, we do think there are surprises on the battery front. They have their own AI chip for autonomous, the only auto manufacturer to have one. And James Wang, who worked at Nvidia for 8-9 years, took a look at those specs and said 4 years ahead of anything that Nvidia is going to be able to produce, because it's single purpose, it's not general purpose. So we think they're going to be way ahead of the game on autonomy.
So I'm gonna stop there. Basically, she said that she had someone from Nvidia, which is a company we analyzed their charts, who makes the chips, and their former employee looked at Tesla chips and said that they're 4 years ahead of Nvidia. So Tesla's not just a car company, y'all. They're doing things at a high level where people are saying that they're ahead of the car industries by 14 years. They're ahead of the computer chip industry by 4 years. They're ahead of the energy industry by 10 years in terms of battery technology. This is the recipe for a serious uptick in value. So I'm going to start closing out this, and we can, probably take a few questions. But this is what I'm going to say to y'all. And I'm going to take it off the screen and stop sharing. Okay, this is what I'm going to say to you all. So Kathy Wood is someone you need to know. In terms of stocks, there's another guy you need to know. His name is George Perez. That's George Perez Stocks. That's the guy I listen to as well. He's very good. George Perez, Solving the Money Problem. Those are probably the two main ones that I listen to. And then I follow the company leaders on Twitter. Now, here's what I'm gonna say to you all. And I said this a couple of years ago. Because Kathy Wood has been so right, she's actually upped the 15,000. She says that she thinks Tesla will be $20,000 by 2024. What that means is this. If you want to be a millionaire by 2024, you need to own 50 shares of Tesla stock. 50 times 20,000 is $1 million. So if you find yourself in 2024 with 50 shares of Tesla stock, you're going to have $1 million. This, to me, is actually this is probably the easiest way to become a millionaire, unless you're going to grow to 7 feet tall and you know how to learn how to dunk a basketball. Now, they're going to have a stock split where it's going to be 5-to-1, so that $20,000 price is probably going to go down to $4,000. So that means you need to have 250 shares after, where it's going to be at $400. You're going to need to have 250 shares of Tesla. If you can get it over time, 4 to 5 years, that's a way that you're going to have $1 million. Nobody ever, I don't think anybody ever told you like a legitimate way to make $1 million over time. But this is one way. Tesla is not going to be stopped. And if you wanted, you could just invest, put your money into Kathy Wood's funds, which is ARK Invest, and you can just go on, you can go on Robinhood, and I'll just share this. Okay, you all see the screen? ARK Invest. So ARK has different funds. They've got ARK K, which is for innovation, ARK W, which is for the internet, one for genomic, one for fintech, which is financial technology like Bitcoin and things like that, and then Q is for autonomous technology and robotics. So each of her funds, if we just look at it, we can look at the price chart for her funds. In the last 5 years, her funds have done 325%. The last year, if you'd have put your money in Kathy Wood, you'd have done 96%. That's her funds. So she picks the stocks for you, and you just buy her stocks, which is the general stock of all the stocks that she picks. So in a year, you're going to do 96% with Kathy Wood. You just give your money to her and then let her do her thing. All right? Look at that. 3 months, you'd have done close to 50%, right? And that's the innovation fund that covers a lot. So her internet fund is actually doing better. Let's go to 5 years. That's at 344%. 1 year, she's doing 107%. So literally, if you buy this stock, because you saw Kathy Wood, you see how she thinks, and you just put your money in this, you didn't do any research because she has a staff of 100 people doing research for her. If you just put your money to Kathy Wood, you're gonna do from 50 to 100%. You're gonna do, if you put your money in Kathy Wood, you're almost sure that you're gonna do at least 50% return per year. And more likely 100%. But if you want to, start picking your own stocks, you can do greater than 100% because I showed you things like Square and Tesla and other stocks that I'm invested in are doing more than 100% per year, right? So that's Kathy Wood, ARK. Okay, I couldn't do this without talking about Kathy Wood. That wouldn't have done this justice. Now, we're going to end by, we're going to play the doubles game. All right? The doubles game is doubling your money. Now, when people say, oh, you can't double your money every year, we just saw that you could. I showed you with the stock charts that the performing stocks are doing double, easily. The ones I just showed you, the Teslas, the Squares, the AMDs, and I'll give you a list of the ones that I'm invested in before I leave, the ones that you should look at. And then you can start doing your own research, okay? But they're all doing over 100% a year, all right? All right. We're gonna do the doubles game. We're gonna do it with fingers. Everyone hold up your fingers. Everyone hold up your hands, okay? Everyone hold up your hands. Year one, we're gonna start with $10,000. Year one, $10,000 gets doubled to $20,000. Year two, $20,000 goes to $40,000. Year three, $40,000 goes to $80,000. Year four, $80,000 goes to $160,000. Year five, $160,000 goes to $320,000. Year six, $320,000 goes to $640,000. Year seven, $640,000 goes to $1.28 million. This is with $10,000. And this is not with any more money being added during that 7 years. That's just $10,000 7 years ago, and you doubled it every year because you know which stocks to put it in. You know that when one starts falling, you just put it in what? Better soil. So at the end of the year, you'd have made double every year with just $10,000. And at the end of that 7 years, you're sitting on $1.28 million. But they're telling you and me to put our money into savings account where we're getting 0.1%. They're telling you and me to put our money into 401k plans where we're getting 4% a year. This is why I'm disgusted. This is why I did this for free. Because I'm tired of people getting the short end of the stick. Just because we don't know, and nobody took the time to show us this. This is something I found out myself. And I'm coming back to the plantation to tell you how I got free. Because at the end of the day, the rich get richer. Not because they're better than you, not because they're more educated than you, it's because no one ever sat you down and told you what they do. $10,000 becomes $1.28 million if you know how to double it every year for just 7 years. So imagine if you were doing this since you were 18 and you're 50 now. That's what I'm mad about, that I didn't start this earlier. I'm mad that no one sat me down to show me this. And this is being done with very little effort. So now you're going to start looking at life a little differently when you decide to blow that money on that vacation. And blow that money on a car you don't need. And on clothes that you don't need, because you're going to say, damn, I could have put that money into Tesla stock. I could have put that money into Square stock. I could have put that money, and I would have made 10x on that money. So now every single piece of money you spend now, you're going to make a decision. Do I want to lose this money or do I want to grow this money? If you're running towards losing money, you're going to be poor. If you're running towards growing money, you're going to be wealthy and be able to pass it down to your children and be able to show your children what you did. This is more valuable than the money itself. This is why I can wake up whenever I want. This is why I sleep whenever I want. This is why I travel wherever I want. This is why I do whatever I want. Because I learned this. No one taught me. This is something I had to learn through trial and error. But I've gotten to a point where I've mastered it, where I can just teach you all to do what I do for free. So I would encourage you all amongst yourselves, start forming groups. Start forming groups, because the people that I talk to now, we don't talk about nothing but this. Everyone who talks to me now is like, yo, what's this looking like? This stock is doing good. That's doing good. That's the conversation we have now. Nobody's talking about Jay-Z. Nobody's talking about Beyonce. Nobody's talking about Kamala Harris. Nobody's talking about Donald Trump. Nobody's talking about none of these people. Because those people are going to do what they're going to do. The question is, what are you doing? What are you doing? Your family's depending on you. And I'm telling you this, that they don't teach us this because the educational system is trash. The MBAs don't know this information. I've got people with PhDs in business who call me for advice. I got people with MBAs that never learned how to buy a stock. But they've got debt for their education, no tuition, and it never showed them how to really make money. What are we doing? Now, if I start telling you all, if you get $100,000 and you start doubling money, and we start doing those numbers, it starts looking uglier. You start getting really upset, because some of us have gotten $100,000 in terms of an inheritance or something, and we didn't know what to do with it. Some of us have gotten that money. Some of us are making that money that we're putting into our bank accounts in savings over the years. Those of us who are in their 60s and their 70s, they've got that type of cash from their retirement accounts over years. But imagine if that was going into doubling your money. Instead of that little $100,000 that you got for your retirement, you'd be sitting on literally $100 million. And I'm not making this up. You all saw the charts. People will tell you, oh, this person's selling you wolf tickets. This is number one, I don't want your money. I don't want your money. Use your money and help yourself. I don't need your money. I don't want you to pay me. So that's number one. Number two, you learn how to do this yourself. Teach your children how to do this. Number three, stop listening to people in suit and tie tell you things and take your money. And then when you want to get your money, they want to penalize you for taking it out of your 401k. With the system that I just taught you, whenever you want your money, you just hit sell. And you have that money in 24 hours. Now I'm going to end with this, then we're going to get into question and answer. Any society that you're in teaches you what is important based on how they punish you. In the American society, they punish you in two ways and only two ways. They punish you with money, in other words, they give you a fine, or they punish you with time. That is doing jail time, right? And that's what they call it when you go to prison. They call it doing time. So they're telling you that the most important things in this society is money and time. If you don't have control of your money, you are a slave. If you don't have control of your time, you're a slave. And if you don't have control of your money or your time, you're both. You're a double slave. So that means that you have to be serious about your money and be serious about your time. What trading and doing this in the stocks is that it teaches you to take control of your money and to take control of your time. Because we're looking at 1-year charts, 5-year charts. You're planning your time. If you don't have control, if you make $1 million a year, but you ain't got no time because you're working 80 hours a week, are you free? But if you got all the time in the world, but you ain't got no money, are you free? That means that you need to have both. You need to have money and you need to have time. This shows you how you can have both. I showed you the guy who over time bought 1,000 shares in Tesla and is sitting on $1 million, and in 2 months it went from 1 million to 2 million because of time. Now, what has happened is this. Because I've made the investments that I've made, and I know it's only a function of time, guess what Haru's not doing? I'm not doing any stunts. I'm not doing no bungee jumping. I'm not racing cars. Guess why? Because I know in a year from now what my stock portfolio is going to be looking like. I need to be around to see that. So I'm preserving my life. I'm exercising because I want to live a long life to be able to see the returns on my investment. You see, when you start thinking this way, life becomes different. How many billionaires do you see that look overweight? Not many. The reason is because they want to stay alive because they got investments. You see, you start living recklessly when you ain't got nothing to live for. Now they say, I want to live for my family, all of that, but you don't put no time on that. But when you start investing and you know that you're going to get a return in a year, you're going to start doing everything in time. All right? So the people who got to leave can leave. If you got to leave, you got to leave. That's fine. Some people left an hour ago. Get what you can out of this and run with it. So at this point, I'm going to let you all know, I'm going to stop my ranting, but I wanted to just light a fire under you all. I want to light a fire under you all because I'm not smarter than anybody on this Zoom. I have average intelligence. You all can do the same things I did. My only difference is between maybe me and the rest of you all is that I really take personal freedom seriously. I don't like having to work for anybody. I don't like having a boss or a supervisor. It hurts me to my heart. So this is why I do the things that I do. So at this point, we are going to take some questions, and the questions will be from the chat. So go ahead and ask your questions. Those who want to leave, you can leave. Get whatever you can. I've recorded this. I'll probably put it up on YouTube, on my YouTube channel that I'll be doing a podcast very soon. We'll be talking about we'll be talking about health. I'll tell you all how to deal with this COVID thing. I'll be making a post on Facebook, so you all let me know. And my YouTube channel will be Haru Ofori-Atta. No, it is best to purchase between now and the 22nd. Don't wait for the split. Anybody got any other questions? I'm going to take questions. Just give me the questions. I'm going to answer them. The market opens on Monday. It'd be best if you purchase now. What about taxes? Like I told you, there's capital gains taxes. If you hold over a year, you get taxed at 15%. If you hold under a year and you sell under a year, you get taxed at 30 to 40%. You can go get an accountant. That's a good problem to have. What stocks continue to make money for me? At what point do I sell? Like I said, if it starts going down to a point that I'm uncomfortable with, except for Tesla, because I know what Tesla is, I just sell it and then I move it into something that is making more money. So you never lose the money. No, I don't want to unmute any mic because there's 100 people on here and it's just gonna, you know, I could talk about specific stocks. Someone's asked me to talk about Workhorse. You know, there's been a lot of people been on. It's been 3 hours. I might do this regularly. I might have a special group from people who are serious. An example of stocks over $7,000. What do you mean by over 7,000? That cost more than $7,000 or that have a 7x return? I don't know which one you mean. That's from Camille Smith. If it's $7,000 right now, I'm not sure which stock is over 7,000 right now, but this is what you need to know. Oh, I know why you're asking that. Cost per share is because of the prediction. Here's what happens, Camille. When the stock price gets too high, companies do stock splits. So, for instance, Apple has had about 5 stock splits. So that's why when you look at Apple's price right now, we can look at Apple's price right now. Apple's price right now, because the reason why Camille asked that question, she wants to know what's the precedent for companies reaching that high. That's really why she's asking that question. Apple is $498, but Apple has had about 5 to 7 stock splits. So the true price of Apple is probably around $20,000. And they're about to do another stock split. That's going to be 4 for 1. So after they do the stock split, which is going to be like in a couple days, I believe, the Apple price is going to go from $500 a share. 500 divided by 4 is around 100. It's going to be like $125. So that's going to be the stock split. So before it was $498, now it's $125. So it doesn't give you a true sense of what the true price of Apple is. You understand what I'm saying? So if you really didn't do the stock splits that Apple has done, the price of Apple right now would probably be about $20,000, $30,000 a share. So I hope that answered your question, Camille. All right. Let me see. There's a lot of questions coming. Global recession, bad news for stocks. It might be bad news for stocks in general, but not necessarily for particular stocks. So for instance, COVID was bad for the airline company. I'll give you an example. You're looking at the screen now. Let's go to American Airlines. People stopped flying. American Airlines. Look at American Airlines in the last 3 months. Last year. Look at the last year. 54% decline. Last week, 8% decline. They had a good month coming, and then the 3 months. But in the last 6 months to a year, they've been declining. You see they dropped right here, February 21st, 20th, and you see that steep drop? That's when that COVID thing hit. People stopped flying. So yeah, you can invest in airlines if you want to. That's a way of investing, is to buy low and just wait for it to come back. But we don't know when people are going to start flying like they used to. So you might be sitting on it for a while. And then that same money you didn't put into Tesla or Square and participate in growth. You see what I'm saying? So you can decide what you want to do. If you want to put some money into airline stock, you can. And that was something that I did. But what I did was I actually took that money out after I saw that it wasn't, because I thought that the market, the people flying, was going to increase, that was going to, you know, like really get back to normal, just like September 11th, 2002, or 2001, when, you know, people stopped flying, but then people started flying again. So I was timing the market, but people aren't flying like they used to yet, even though there are certain countries that are opening up and flights are resuming. But that same $1,000 that I could put into American Airlines and wait for that price to go up, I could be putting in Tesla right now and been experiencing. So this is a good question to ask. Let's say I put my money into airline stock because I knew it went down a month ago. And the airline stock went up 6%. That same $1,000 I could have put into Square or Tesla. Let's just do Square because we've been on Tesla a lot. And for that month, it would have gone up 19%. So it would have been better for me to put that money into Square. If I put it into Tesla, for that month, at the beginning of that month, it would have gone up 27%. You see what I'm saying? So that's what we're doing. All right. Let me go up and answer some of these questions. Do me a favor, people, stop asking questions until I catch up. Don't ask any more questions, please. let me start asking these questions that came from 3 o'clock. Thank you, thank you. Options. Options is advanced. We can talk about options at another time. I'll probably do that later. I'll probably do a special group for like serious people because this is the beginning. I'm doing this for free for beginners because people just don't know. And a lot of people who want to explain it to you aren't going to explain it in a way that you can understand. They're going to use jargon and all of that. That's why I wanted to do this. And I did it for free because of that, because I want as many people to get on to learn. And then you all now can teach other people my techniques so it can be viral. So options, that's a little bit more complicated and a little bit more risky, but the upside is a lot more. You can make 10x. I'm in an options trade right now with a company called Workhorse. And I could talk about that, but not everyone wants to hear about that in this group. So what I want to do is I am going to answer these questions. So people who are interested in options, that's a later time. If enough people are interested, I'll do a Zoom on options. So, all right. Group right here. Cash App for donations, please. I don't want any donations. Whatever you were going to send me for donations, that's Bookman Sankofa, give thanks, brethren. I don't want the donations. Donate it to yourself. Use that money that you would have given me to put into your own stocks. I don't need your money. And I don't want your money. That's not what today was about. Today was completely free. This is my way of fighting back against the system. All right, Q&A. All right. People who want a recording, I will not be sending recordings because there's 100 people asking me to send emails, and I'm not going to be spending my time doing that. I will put it up on my YouTube channel. You all can just watch it. How does one keep their monies liquid? Where's the best place to do so? The best way to keep your money liquid is you're going to put it in a savings account or you're going to put it in stocks. Savings account, if you want 0.1% where you can't lose the money, but it'll be 0.1%. Or you can put it into stocks where, yes, you can quote unquote lose the money, but not using my technique of going from bad soil to good soil. You won't lose the money. All right. Someone for the recording. No, I will not be sending the recording to your individual email addresses. Stop giving me more work to do, y'all. All right. Nope, I won't be sending it to the email. I'll put it on my YouTube channel, and I'll put my YouTube channel on my Facebook, so you can just go to my Facebook when it's up on my YouTube channel. And my YouTube channel will be regular. I'll be doing regular videos. I'll be talking to people all around the world of different levels of expertise, and we're going to talk in a way that a 10-year-old can understand. So if I talk to a nuclear physicist, we're going to talk in a way that a 10-year-old can understand, because I'm tired of inaccessible information. Information that people can't understand because people haven't broken down what these little slangs and jargons are that people, use to try to make themselves sound smart, but they're not able to communicate or teach anyone anything. So my podcast is going to be a little bit different. It's going to be basic English, and we're going to talk about high concept things: nuclear physics, economics, stocks, options, music, musical theory. We're going to talk about all types of things, but it's going to be understandable. Q&A. When should we invest in Tesla? Yesterday. Stock continues to make money for you. At what point do you sell? You sell your stock. This is Tashiki. You sell your stock when you want to take that money to put into another growth vehicle, like your own business. I'm not selling Tesla unless I need that money for something, not for a bill. I'd rather go outside and sell water on the street and pay my bill than to sell my Tesla stock. You understand? You don't use your stock to pay for liabilities. That's working ass backwards. You use your stock to use the money to invest in other things that's going to grow. We're talking about good soil. You don't take good soil money and put it into bad soil. It makes no sense. Why would you do that? Why would you take a mango tree or a banana tree, and you would take a slip from a banana tree that's growing in good soil and put it into bad soil? It doesn't make any sense. That's what you do when you take your stock and you take profit from your stock portfolio and go spend it on a vacation. Now, if you want to take a vacation, use your 9 to 5 or your business money to go into that. But your stock money, don't touch that. Leave that for exponential growth. And then you only take that money out to form a business, which will get you more growth. That's what you do. That's how the rich get richer. All right. My Twitter handle right now is Herbal Results. I'll be doing my personal Twitter handle once I put up my my podcast, which will be next week. I'll be doing my first podcast. And that'll just be under my name, Heru Ofori-Atta. George Perez, just go to YouTube and put in George Perez stocks. He explains stocks very well. The stocks that he's into, gives a lot of information about them. You'll get a lot of information. He speaks very, very, very slow and simply like I do. Social media handles, Heru Ofori-Atta Facebook, Heru Ofori-Atta Instagram, Heru Ofori-Atta YouTube, Heru Ofori-Atta Twitter. Okay, is it best to purchase now or is it okay to wait until the stock split? If you wait until the stock split, the prices are going to keep going up. Why would you want to do that? Don't do that. Monday is when it opens, you should buy on Monday, even if you put in 20 bucks. The price is going to keep going up, and then on the stock split, the price is going to keep going up, and then on battery day, the price is going to keep going up. And when it adds to S&P 500, the price is going to keep going up, so you might as well get it now. And hold on to it. This is not a short-term play, you all. This is not something that you're going to put $20 in or $50 in, and you're going to call me next month because the price went down. We're holding it for a year. And a lot of you all on here, some of you all, not some of you all who's tuned in, but some of you all who are not tuned in are real ungrateful because you all aren't going to text me when you're making money with Tesla stock. The moment you lose $1, you're going to start texting me saying, Heru, I'm losing money. What happened? You told me Tesla, I'm losing money. It's because you don't have patience. You contact me when your picks are going down, but you ain't going to call me to just see how I'm doing when you're making money. I know y'all. I know my people. I know how y'all get, and I know how y'all do. I love y'all, but you know how y'all behave. So don't call me when a stock price goes down because I'm not telling you what to do. I'm telling you what I do. If I'm you, this is what I would do. If you make money, good. If it's lost, it's not lost if you use my technique. And you can feel free to say, Heru, I'm struggling with this stock right here. What do you think I should move it into? Or what would you move it into if you were me? And I'll tell you. I'll do that for you for free. Just hit me up on Facebook. Inbox me. I may not get to you right away. That's the other thing too, is that some of you inbox me. If you don't hear from me the next hour, some of you all get upset. Not understanding I'm getting 200 inboxes with the same question. And a lot of times, please don't inbox me if you've got a question that can be answered on Google. Like, what is Tesla stock symbol? How can I find Tesla on Robinhood? You can Google that. Don't ask me those questions. What's Tesla's stock price today? Don't ask me that question. What about taxes? Talk to your accountant. What's my take on options? They're good if you know what you're doing. Bad if you don't. It's about timing. If a stock continues to make money for you, at what point do you sell? I already answered that. You don't. Unless you're going to liquidate that money and put it into something that's another investment vehicle that you think is going to do better. This is why generational wealth is created. That's why when some people, their parents die, they're left with $1 million because their parents never sold that stock. Workhorse. That is a specific stock. I won't go into that right now, but anyone can go on the Workhorse chart. Just put in Workhorse, look at it, and look at the charts. They're vying for a $6 billion US Postal Service contract. Cash App does not have a 5-year chart. Let's look at Cash App. I think they have an all-time chart. But let me go on Cash App right now. You go to Cash App and you go to the squiggly line at the bottom for the stocks. And they have, yeah, they have a 1 year and they have an all. So you just work with what you got. Or you just register for another, like Robinhood, and you don't buy through them, and you just, or you can go to another platform like Google stock charts, and you can look at the stock charts to get the 5-year chart, okay? Rumors of a crash, crypto markets reset. How does that affect the market? I'm not getting into crypto, that's a little more complex. I'm also in crypto. I do just as well in crypto as I do in stocks. Crypto is hyperbolic growth. A lot of people don't got the stomach for crypto. They will love the gains that you can make, like you can make 10,000x in crypto as opposed to 10x. But some people won't be able to handle it because it has sharp rises and falls. You got to hold on for a long time. I've been in Bitcoin since 2012. I've seen the ups and downs. I got in Bitcoin when it was $200. It's now 12,000. But I've been in Bitcoin when it was at 200 and it went to 1,000, and a week later it went to 100. A lot of people would have been upset, but I held on because I understood the technology and I understood what the future holds. And the future is in digital currency, not cash. That's why wealthy people will tell you cash is trash. Because all you can do with cash is buy debts. That's cash sitting down in your savings account. That's 0.1%. As far as I'm concerned, a 0.1% return is a debt because it can't keep up with the price of inflation. So you better learn how to put your money in stocks and have it in stocks. So right now, all my cash is to the dollar what I spend every month for my household. Everything else is an investment. And when I need the money, if I have an emergency, I'll sell the lowest performing stock that I have. I'll sell that. But I'm not touching Tesla. I'm not touching Square. I'm not touching AMD. I'll sell something that's not, you know, if I was in Facebook, I would sell that. Because you saw the performance of Facebook didn't compare to the other ones. All right, am I still Forex trading? No, I do not trade Forex because it was too time consuming and it requires a lot of money for you to be able to make any appreciable money, and you've got to keep your eyes glued on the screen. And remember what I told you all about time. I don't care if I make a lot of money if I don't have any time. So if I got to spend all my time on a screen because the price movements are so dramatic, I'm not going to get into that. So yeah, you can make money with FX trading, with Forex, but you got to keep your eyes glued on the screen. And that just wasn't for me. But learning technical analysis through Forex trading is exactly how I learned how to do stocks, which is much easier. Should we buy the car or the stock first? The stock. The car is an investment, by the way, because I didn't get into this, but they're going to start doing a robo-taxi network. While you're at home, you can actually send your car out to the Tesla fleet because it's self-driving. There won't be any more drivers for Uber in the next couple of years. You'll be having Tesla cars that will pick up people and drive people, and you'll be cost sharing and profit sharing with Tesla. Elon Musk did a whole thing about that. You can look up Tesla robo-taxi. Okay? And so he estimated that you'll be able to make at least $30,000 a year as an average person. And because I work from home, I don't drive every day. I don't even drive an hour a day. So my car is just sitting here and it could be making money in the robo-taxi network with self-driving. And it's already self-driving. You can have Tesla, you can be getting out of the grocery store, your car is parked, and you can press a button and the car will come to you right now with no driver. It's called the summon feature in Tesla. Right now. If it's raining, you can do that because you don't want to go out in the rain. You can stand under, in the store and press the button, and the Tesla car will not move if there's cars coming in the way. It has cameras, and it will maneuver to where you are, to you. All right, Camille, I answered your question about the $7,000 stock. There are those stocks, but you wouldn't know it because of the stock splits. I answered the Forex trading. Additional stock buying apps compatible USVI. With USVI, they screw you all. I think you can get Cash App in USVI. If you can't, then use a family member's in the States address. Same thing for Robinhood. People in the Virgin Islands, when I used to live there, I told them about Robinhood. They had the same issue. They just used the address of a family member that lives in the States. So they use that address. All right. Serious group. I haven't started that group yet. When I do, I'll just post it on Facebook. Find out about new and upcoming companies. The best channel to find out about new and upcoming companies right now is go listen to George Perez. I will show you all his YouTube. George Perez, stocks. That's him here. That's his channel. So he'll tell you
because we're going
the best stocks to buy now, August 2020, high growth stocks. So he'll give you the list of stocks and he'll break it down. That's him. That's George Perez. Everyone sees him here. That's one of my favorite people to watch. And then when you watch him, you'll start seeing other people who post, and you can watch them as well, but he's very good. George Perez, and then the guy was solving the money problem. He's solving the money problem, guys, mainly focused on Tesla. George Perez is focused on other stocks. You can go to him and you can start seeing what he's saying, and you can get into the stocks that he talks about. And he has a library. That's a good thing about YouTube, is that there's a library of videos. So you can start looking at the videos that he talked about. So for instance, if you go to his video list, you will see all of these. You know, he talks about Workhorse and their contract, Apple, stock analysis, best ETFs to get that's Kathy Wood. And he talks about, like, you know, all these different stocks. So you can, if you start having this playing in your house, then you know that you have actually transformed your house, where people are starting to talk about stocks, and it gets addictive. When you start seeing that you're making money, and some people have already contacted me that they're making money already because they bought Tesla stock, you know, last week, and it gets addictive. Making money gets addictive. USVI, new and upcoming companies, George Perez. Do I do all fund manipulation all on Robinhood or Cash App? I don't know what that meant about the fund manipulation. I don't know if she's talking about ETF funds or whatever. I don't know. So Mona Cherry, you'd have to elaborate on that if you're still on. Cannabis stocks. You can invest in cannabis stocks, but because it's federally illegal, it's still kind of unsure. But if you get in on some early and they grow, yeah, you can have a good upward movement. But you're going to have to wait for that upward movement. Let's see what else we got. Can we do one session on how to secure loans to invest? Well, you know, I don't believe that you should use money you don't have to invest, right? Because it just puts you in a hole if something goes wrong. It makes you nervous, especially if you're new to it. But I was just talking with somebody yesterday who was interested in investing in Tesla, and we started running some numbers. So she has a house, and she's looking about getting her equity out of her house and putting it in Tesla, and she can get the equity loan at like 3%, right, per year. So I want you all to listen to this. She has about $100,000 equity in her house where she can get cash as an equity loan at 3%, which means that she has to pay $100,000 plus the 3% for the year, right? The 3% is $3,000. So she's going to owe the bank $103,000. The question I have to ask her was, although I don't encourage taking a loan to put it into Tesla stock, if we look at the Tesla chart for a year, the growth is 816%, which means that if you took that loan from the bank, all you're looking for Tesla to do is more than 3% in a year to break even, to pay them back. Which means if you took that loan for $100,000 out of your house or wherever, and it's at 3%, you'd have made 9 times your money and paid the bank back without taking any real risk. So the question, if you're going to do any loans, I see some people's faces and their mouth just drop. If you're going to take a loan, go look at the stock charts and look at the 1 year, because the loan rate is based on 1 year. So if it's a credit card, it'll be 18%. So if you do the credit card, the question is, will this stock do more than 18% in a year? And as far as I'm concerned, if you're talking about Tesla, we're doing more than 18% in a month. You see how the rich get richer? They do leverage too. I don't encourage doing loans because it becomes a bad habit. But to be completely honest, the math works out. If you ask me, what are the chances that Tesla is only going to do 3% in the next year? I would say the chances are pretty much zero. There's never been any time in Tesla's history where they only did 3% stock growth. And now that they're even more efficient in making more vehicles and there's more market share, there's no way they're going to do 3%. So if she did that mortgage loan, she would probably do great. I'm not encouraging it. I'm just saying that let's just take emotions out of it and just be like assassins and start looking at the money. If you did the same thing with Square, which owns Cash App, over a year, you'd make 135%. And the bank is looking for you to pay 3% back. So you're in profit at 133%. So that's a way that you could leverage money that you might not have as a loan, and you actually make money off of somebody else's money, other people's money, which is the bank's money. So yeah, it could be done. I don't encourage it, but you could do it. I just look at the numbers. All right. Someone asked a question about, okay. All right. Acorn app works. Yeah, you can use Acorn if you want. They also do fractional shares. Robinhood versus Acorn. I don't use Acorn. I use Robinhood. I like Robinhood because of the charts. What about options? That's too complicated to talk about right now. That's a whole different session. Stocks before September, Tesla before September 26th? Yes. September 22nd, because that's battery day. After battery day, you can expect to see the stocks go up dramatically. Am I still FX trading? No. Global recession, okay, I did that. Apple's not doing a 2-to-1 split, they're doing a 4-to-1 split. New companies, yeah, we did that, George Perez. Herbal Results, yes, herbalresults.net. Anyone who's interested, we've got reversals on serious diseases. You can just go there. I'm not going to plug that right now. www.herbalresults.net. Cannabis stocks is federally illegal, so we don't know. If Joe Biden becomes president, he still wants to keep it illegal on a federal level. And Kamala Harris put people in prison for cannabis. And I don't see it becoming legal if those people get into power. I don't see it becoming legal. Trump had 4 years, he didn't make it legal. So both sides, I don't see it becoming legal on a federal level. So I don't know about putting money into something that's federally legal right now in terms of growth. If it becomes legal, you can expect to see great growth. But if we have $1,000 to put in, I'm not putting into cannabis stock. I'm putting into stocks that are already performing and aren't illegal. Olive leaf extract, yeah, just herbalresults.net. Open mic, questions, more transparency, FX, I already talked stocks, options I already talked about.
I think you may be going backwards.
Am I? Oh, because you know why? People keep adding new messages. That's why. Please don't add new messages. Let me get through these.
I think the next question would have been, has black buying power culture been considered as we're introduced to this type of investment?
Black buying power?
Ingrid Bernardes, I think would have been the next question after the compare Robinhood versus Acorn apps.
Okay. Yes, I've heard about Webull. What do we need to ensure our kids reap these benefits? Stock trade with your kids, Munique. Whenever you do a stock, buy, let your kids be right there while you do it and explain why, and then get them talking about it. Ask them. I sit down and talk with kids and I ask them, what do you think about Zoom? And they have their opinions. What do you think about Snapchat? They have their opinions. They're going to tell you, well, this one is actually hot right now. All my friends are doing this. And you can start looking at the price charts. And then you just follow my rules. So do it with your kids. And you're going to find out that your kids are going to start debating amongst themselves which stocks are good. And when you've done that, you have succeeded as a parent. When your kids are fighting amongst themselves about which stocks are better, that's the type of conversations you want to have in your household. Crypto, Bitcoin, yeah, that's fine. Okay, I don't know about that. That's just too much. When you're gonna get the recording, whenever I put it back on when I put it on YouTube, I will not be sending it to people individually too. I already mentioned that. Software to track my earnings. No, I do not. I do not have software to track my earnings. I just tell people what I buy. I don't want people exposed to how much money I have for obvious reasons. But I'll tell you what I put my money in, and then you can track it by the growth. To buy as an individual, as a company, buy as an individual, because that individual knowledge is more important. Alternative apps to Robinhood, people mention it, Acorn, Yolanda. I don't know why it's not approved. You can inbox me. I know who you are, Yolanda. You can inbox me on Facebook and I can see why it wasn't approved to see if you can get approved. If not, you can just use Cash App. If you got $2,000, would you put on Tesla? If I had $2,000 right now, I would put 70% on Tesla. I mean, me personally, I would put 70% in Tesla. That would be about 1,400. I would put 20% in Square. There's another company called Plug that's doing real good. We didn't get to talk about that. Plug Power, I'll just show you the chart real quick. They do hydrogen, but they do hydrogen for forklifts. And they are getting the contracts to do it for Walmart and all these big companies. If you look at Plug, in the last 5 years, 455%. In the last year, 471%. In 1 year, Plug Power. Last 3 months, 205%. Okay? So this is who I'm invested in Plug. I'm invested in Square, I'm invested in Tesla. So what I would do, because I know what's about to happen into Tesla for the 22nd, a lot of my money will go into Tesla now, because this is the cheapest you're gonna find Tesla. I'll put 70% into Tesla. I would put probably 10% into Square, 10% into Plug, and another 10% into an option contract. That's what I would do. So that's to answer your question. 70% into Tesla, 10% into Square, 10% into Plug, and you can do any variation of that. You can do 60%, you can do 50%. But I would put some into Plug, I'll put some into, because I like to diversify. Okay? All right. That was a good question by Amy Lalane. How to work the Robinhood screen to do a transaction. You would just go buy, sell. So on your app, you would just see the button here to buy, and you see sell. On the phone, it'll be a button. You just hit buy, then you would review your order. Then if you want to sell it, then it'll go into your account immediately. And this is when the market is open, and then you would go into another another stock, if that's what you want to do. It's very easy to do. Just go on and just play around with it. Where are these messages at? Okay. Chat. Fidelity. If you like that trading platform, Robinhood does not charge you for trades. So make sure that your Fidelity is not charging you for trades. In the past, before Robinhood, they used to charge $6.95, $7 for every trade you make. Now, because of Robinhood and it's free to make a trade, everyone else is starting to do it. So just check and make sure that your Fidelity, if you're comfortable with Fidelity and their price charts and all that, you can stick with it. But make sure they don't charge you for buying and selling. That's the key. All right. Robinhood. Okay, you see, as I do this, because people are, okay. Please don't add any more questions. It messes up what I'm doing and I can't keep up with what's going on. Oh yeah, so it would be, the other 10% would be in a stock option, which I haven't taught you all. That's just betting on the price going up or down of something, and you would be able to make, you know, like significant gains. So that's what I would do. Robinhood won't let you buy anymore because the market is closed. Yeah. So what you have to do is that you would put money into Robinhood, into your account, and then they give you like $1,000 leeway, so you'd be able to buy right away, unless you have Robinhood Gold, which charges you $5 a month, and you would have instant. The money would be instant over $1,000. So let's just say you need to transfer $1,000 to Robinhood to buy $1,000 worth of stocks, and you're going to buy maybe $50 here, $50 there, and it goes into $1,000. What would happen is that Robinhood will spot you 1,000 and make it available right now, and then they will take the 1,000 from your account. The reason why they do that is because you might want to get into that stock right now. If you have to wait for it to clear your account into Robinhood, then it would actually be 3 or 4 days. So you might miss that position, okay? I'm gonna answer a few more questions and I'm gonna close out because we're heading on 4 hours and people start getting tired, okay? Let me do 3 or 4 more questions. Please don't add any more questions. Do not add any more questions. I wanna answer some of the questions that I think are important. Dividends, investing for dividends is trash. They give you a very low percentage. You get like a couple of dollars every month. If you want to do that, that's fine. The best thing with your money is to invest for growth, not for dividends. That's my opinion. And I mean, I could do the math with anyone who wants to do the math at some point. So you'll have a high paying dividend stock, which is paying you a certain point something percentage or something per share, and you'll get something from that every 3 months. But it's not like money that you can get wealthy with. And then you have to put a lot of money in. So if you're gonna put a lot of money in, it might as well be in something that's growing at 10x. So that's dividends. And let's see. Okay, yeah, network marketing, waste of time. Transaction to another, you just buy, sell when you want to sell. The cash will be there immediately, and then you go straight into another buy. Copy of this recording, I answered that already. Personal records and tracking. Oh no, oh, I'm sorry, Kai Wilson. Yeah, I look at my Robinhood account, and that's how I keep track with everything. Because Robinhood, if you start looking at the panel, they tell you everything. They tell you your average cost and everything, and how much profit you made that day, and the totality of your whole portfolio or per every stock. How does Cash App make money? That's a whole different conversation. They charge fees when you buy Bitcoin. So they charge like 2% something, almost like how a credit card company makes money, but when you send money, it's free. So that is the end of it right now. I hope that this was informative for everybody. I hope that you all got something out of this and that you know something more than you knew yesterday. And I hope you all run with this, really. I don't want to be the only person having the fun. On the other side, the reason why you tell people this information and tell your friends and your family, because you're going to be the only one making money, and they're going to know that, and they're going to start asking you for money. people are going to start asking you to borrow money because they're going to know that you went to stocks. Oh, cousin, this one makes money. So you better show them how to make money so that they stop asking you for money. You understand what I'm saying? This is not just altruistic. You're trying to help yourself. Because trust me, when you start making money in Tesla and they start overhearing your conversations, people are going to start asking you for money, because when people find out a family member got money, people got plans on your money. So the best thing you can do is show them how to make money themselves so they can leave you the hell alone. All right? So I hope that this was informative for everybody. Y'all can hit me up whenever y'all hit me up on Facebook. I'll get to anyone whenever I can get to anyone. And, you know, this is just love, y'all. Y'all want to put y'all the money together and do things? Do it. If you don't, do it by yourself, but do not let other people stop you from what you need to do. That's what it is. This is not complicated. You do not need to have an MBA. This is easy. Teach your children, teach your grandchildren, keep it moving. All right? Love you all. You're beautiful. To see you all, a lot of old people I haven't seen in a long time, even 20 years, 30 years. And I hope you all are doing well. And since you all haven't talked to me in 20, 30 years, and you know, now you want to see me because you want to learn how to make some money, I expect that I will hear from you all, right? I know my people. I know how it is. I love y'all anyway. All right? I mean, there's people I haven't seen since high school. I've seen their name on this. And it's a beautiful thing. Glad that, you know, we can give each other value. And I'm going to end with this. All jokes aside. Learning this information. Someone taught you this for free. Your life is going to change. It is your responsibility to pass this on. Do not be greedy with this knowledge. If I found it in my heart to share this with you all, do not ever feel like this is information you need to keep to yourself and sell to other people. Because someone did it for you for free. You can find it in your heart to now do it for others. And that's what's going on right now, is that people learn how to make money and they don't tell anyone how to do it. All these wealthy people never sat down with nobody and showed them how they made it. So now someone did it for you, pass it on. That's the only thing. I don't want y'all to give me money. I don't even want y'all to say thank you. It does nothing for me. But what I want to see is all of us independently wealthy, because now we'll be able to do something for our families and our peoples and make that change. Because the problem is not that we don't have money, it's that the wrong people have money. People who don't give a damn got money. But if you are who you say you are, and you care about your people, and you care about your community, and you care about your continent, and you care about whatever you say you care about, this is your time to prove it now. Because Marcus Garvey said, you never know a man until his back is against the wall. But I'd like to add to that, you never know a man or a woman until they can do whatever they want. And money gives you a pathway to do whatever you want. And you see how people act all of a sudden when they get money. It shows you who they really are. So once you all start getting money, are you going to share information, or are you going to be greedy with it and hold it close to your chest and feel like you can't tell nobody? That's what I don't want. That's the only thing I can ask you all. I will ask you all nothing. Do not anything. I don't need your accolades. I don't need anything. Just do not hold on to this information for yourself, please. Okay? So we are at the end of this thing. I'm going to log off. I'll answer whatever questions I can answer from this chat. You know, I'll let you all know what I'm doing through my podcast. You keep up with me on Facebook. Next week on Facebook, I'm going to be posting about health and this whole COVID thing and the steps you can take and the mechanisms, the scientific mechanisms that you can take to deal with an RNA virus. And this is an RNA virus. So I'm going to tell you exactly what you can do in terms of natural things that you can take. And I'm going to tell you dosages, and I'm going to tell you the products you can take and the Amazon links and all of that. Because the medical system, all they got for you is Tylenol and a ventilator. That's all they got for you. And your mama and your grandma and all of them. So I don't want to just talk about money. I also want to talk about health. So that's the next thing I'm going to do next week on Facebook. So y'all just keep tuned to what's on Facebook. And, you know, y'all just take care of yourselves, love each other, and just know that in this day and time, in the information age, the most revolutionary thing that you can do is to give useful information to people for free. All right? All right. Peace, everybody.